you look at this, you'll see question 1 was fine. I didn't have any issue with question 1. Question 2 was also fine. You can have a look at this.
I had a question. I have a question with question 2.
Okay, let's look at it. Should I put up your answers as well?
Yes, you
Okay,
can.
let me get your answers. And then we can have a look. Okay. Alright, this was, you had sent, was it a PDF? Yeah, it was. This is something else. Let me just see, where did I save your files? Do you remember if it was a PDF or a Word document, Cheryl? Do you remember what format
It was a PDF.
Was it PDF?
I remember I scanned it.
I see it. It's fine. I got it now. Alright, yeah. So, okay, this is what you had completed. So you had for number 1 was 141730. Let's go back to the Excel. Yeah, 141730. Perfect. Okay, great. You had that one right. Let's have a look at the next one. Number 2, you went with 3. I went with option 4. Okay, this was the depreciation. Okay, so you have a question about this one?
Yes.
Sure. What's the question?
Okay. So I got equipment and I got vehicle. My question is for vehicle. The old vehicles were on diminishing.
The old vehicles were on diminishing balance. Let's go check that.
So for some reason you didn't minus 7,000.
Let's have a look. Okay, this was the assignment. We need to go to the. Let's go to the question and just have a look at that again. Okay, here's the assignment. Okay, so if we're looking at question, this was semester 2. This is question 2 here. This one. Okay, so which of the following alternatives presents the correct amount disclosed depreciation? Okay, that's fine. And that was for the year ended 28th of Feb. Okay. And if you look at the depreciation here, you had 7,000 was accumulated. Yes, that's fine. And the vehicle cost was 63,950. Okay, so if you look at the working, let me just put this big. The vehicle cost accumulated. Oh, okay, I see what you mean. Here, this amount, the remaining vehicles. Yeah,
yes.
this 7,000 here. Yes, okay, that's correct. That I should have written here. Okay, I didn't insert that 7 here because that was for the balance at the start of the year. Yeah, so you're right. Okay, you do have to take that into consideration. I agree. Okay, so let's change this. Minus 7,000, close brackets, times 20. Okay, minus 7 times 20. There we go. Alright, so let's amend this. This answer is then going to be, let's see, is it referenced in the right figure? Yeah, it looks like it. The new is fine. The equipment is fine. So then I've got 14,745. Let's go and
yes, which is option 3.
Was that what you got? Yeah, perfect. Okay, yeah. Awesome, great. Yeah, it's definitely, I agree with you. Okay, so if you look at this, this is the accumulated at the beginning of the period. You do have to take that into consideration with the existing vehicles, 100%. Okay, so that one we can update. Let's change this. So that was option. What option was that?
3.
3. Okay, let's go and check the rest. Okay, that was 3. Okay, let's have a look. 14,75745. Yes. Okay, great. All right. Let's go back and then let's go through the next one. Okay, 3, when I looked at 3, 3 was fine. I didn't have any problems with 3.
Yes.
4, okay, here, 4, there was not an option here. And then I made an assumption, and then I was able to get an answer. But that was obviously making an assumption. Let's see what they had for number 4. Was there anything in that
There's
attachment?
actually an errata for question 4.
Yes, there we
So,
go. Okay, so we've got 1, we've got 2. Okay, this is the rata, so there we go. That's the one.
yes.
All right. So long-term loan amounted to 50,000 instead of 30,000. Okay, so they want us to change the 30 to a 50. Okay, so they want this long-term loan here to be a 50,000. Okay, instead of a 30,000 Rand loan. Okay, so that will obviously change the answer. Let's go put that in. I'm going to leave everything here. I'm just going to move this down and we can look at this working. Okay, so if I look at what we have, we're obviously looking at finance costs. I'm going to leave that. Okay, I'm going to take this first bit because this was the first working I did based on the information in the question. Let's copy that down and then we'll update it. Okay, so after Unisa errata, PDF. Okay, this is what we're going to look at. So finance costs obviously will include the interest on the bank overdraft, so that will stay the same. Nothing will happen there. The interest on the loan will change. The original loan amount would have been 50,000, okay, as the balance at the end of the period. Let's just check that. Okay, if you go to your question, you'll see 50,000 is going to be replacing the balance that we had at 28 Feb. So that is going to update this figure. This is going to be 50,000, okay? If that's 50,000, you've got a new loan, then the loan amount at the beginning of the year would have been 30,000.
Right.
Okay, which is basically what I did up here.
Yes.
Yeah, so I said assume that the 30,000 in the extract does not take the 20 additional loan into consideration. So I basically said that the loan amount initially was 30,000, then obviously the new loan, then I can just put in the 50 that they gave you as errata. Do you see that?
Yes, yes.
Okay, so the answer is actually going to be the same as what I had done here then.
So 6010. That stays the
100%.
same.
Yeah,
Okay.
6010. So we'll leave that as the right answer. Yeah, so that was fine. Yeah, that was the query that I had, but now obviously that's confirmed. Let's paste that.
Yes.
Okay, so I just want to update this. So we'll have 30,000 here. Just to show it again, just to make sure. 30,000, that'll be 3,600. Okay, 36 plus the 8 plus the 16, 10. So yeah, that's right. Okay, the working is correct.
Okay.
36 plus 8 plus 16, 10. Good. Okay, you happy with that? What answer is that?
Yes. That is answer number 2.
Option 2.
Option 2.
Perfect.
Yes.
Okay, let's put that in. All right, we'll save that and then I'll send this updated file to you. Okay.
Okay.
Number 5, let me check number 5. Yeah, number 5, there wasn't any issue with number 5. Okay,
I think we didn't go over number 5, right? Like we didn't learn it.
Okay, did you? Yeah, we haven't covered this because I'm going to cover it when we cover the theory.
Okay.
Yeah.
Okay.
So, going through some of the questions now is a little bit too early because we first need to go through more of the content first, and then I can come back and we can look at this. So these answers you can actually do on your own later on if you want to practice.
Okay.
Okay. Did you attempt 5 at all? I'm just
I
curious.
did attempt 5, but then I don't think I got an option.
Okay.
But I don't know which way I did it.
How is your maths, Cheryl?
It's fairly good, I would say.
Okay, great. So when you look at the actual question, you'll see here that they spoke about a change in ownership.
Yes.
Okay, so if you look at what they've discussed here, Joseph and Jane are in a partnership and the ratio is 3:2. Okay, when you look at ratios, you need to remember that it's a fraction. So it'll be 3/5
Yes.
and 3/5. Is that okay?
Yes.
All right, so that's how you get the ratio. This is Joseph.
Yeah.
Okay, that's Jane. Is that all right?
Yes.
Okay, then they tell you they admitted Anton as a partner, and obviously a fifth of the partnership is going to be sold to him. Okay, so
Yes.
remember, the business as a whole is obviously 5/5.
Yes. Yes.
Okay, so they're going to be giving him a fifth of the business, and they're going to relinquish his interest in the proportion 2:1. So in other words, 2/3 and 1/3. So
3.
Joe is going to give 2/3, and Jane is going to give 1/3, and 1/3 of the 1/5. Does that make sense?
Yeah, I get what you're saying.
Yeah.
I think the only part that I was confused with was the 2:1 part.
Oh, okay, yeah, the 2 to
If you
1.
see my working out, that was where, that's why I ended up with option 3.
Okay, I understand. Yeah, so the 2:1 is referring to how they've relinquished Anton's interest to him. Do you see that?
Yes.
Yeah, so they're saying, so it's basically like this. You've got 1/5, which is basically going to be given by Joe and Jane. Okay?
Yes.
And it's going to be given in 2:1.
Yes.
So
yes.
2/3 and 1/3. So they're giving, or he's giving a 2/3 of the share, and Jane's giving a third of that share.
Okay.
Yeah. This question actually seems very similar to the textbook. Let me actually check my notes quickly, because I have a vague memory about this. This looks very, very, very common. I'm sure I've seen that before. Let me just open up the change in ownership one. That would have been, I think, week 3. Week 3 or 4. Let me just open week 3 first and see. I'm sure it's a textbook example, actually. Sometimes UNISA does just take it from the textbook. Here. Then the maths is here. Okay, this was 8 to 12 to 5. This was 3 to 5 to 2. This was 9, 15, 8. 5, 3, 2. Okay, no, it wasn't from the textbook. Okay, so it wasn't from the textbook. It might have been from a past paper. Okay, I'm sure I've seen that ratio somewhere. It looks very familiar. UNISA does tend to recycle questions. I don't know if you've picked that up from 1502.
Yeah.
Yeah, they do tend to take questions. They change a few things, but a lot of the time they recycle things, which is not ideal, but that's just what I've noticed. Okay, but yeah, we'll look at past papers later on. We'll probably see that question again eventually. But yeah, it looks very, very, very familiar. Okay, so yeah. So you went with, it was the 753, I think. Let's just double check. Yeah, 753. Okay, you can see in terms of my working, when I do these changes in ownership, you'll see I always talk about existing and new, and I even do that with the goodwill. Okay, and the calculation of goodwill, where you have a new partner coming into the business, buying a share of the existing partnership. Right, but that, again, that's all theory. I'll cover it with you when we go through the content. Okay.
Okay.
All right, so that's more maths than accounting. But the accounting part is obviously what comes after that, okay? Because then you have to actually record all the records in terms of what they have contributed in terms of equity, okay? Right,
Okay.
number 6. I did have an issue with number 6. Oh, yes, it was the discount. Okay, you can get one of the options if you ignore the settlement discount. But
Yes.
let's check what the errata had said. Okay, given information for question 6 and 7, 51040 was paid to the credit in full settlement of the accounts instead of 51540. That's what they said. Okay, so let me see if that changes the question in any way. Let's go back. Actually, let's go back to the PDF rather, and let's look at this here. Okay, so they said this amount, okay, is for the full settlement. Okay, not the 5%. That's what they're saying, right? Let's just read that again. 51040 was paid to the creditors in full settlement of their accounts instead of. Okay, instead of.
Yeah.
So instead of means you're going to use this figure, okay,
Instead of
this one. Okay, so that means if it's paid, the amount that's paid is the amount of cash that's going to go out. So you'd be crediting the bank and you'd be debiting the liquidation accounts. Okay, you haven't done liquidation, so you probably won't know what I'm talking about. But there are examples in the textbook, and I'll go through them with you when we get there. But this figure that they're referring to is the actual cash that's going to be received or paid rather to the actual creditor, if that makes sense. Does that make sense?
Yes, that does.
Okay, so if I look at the working, let's just see what I had assumed here initially. You can get one of the options if you ignore the 5% discount. Okay, let's do the same thing as what I did for the other one. I'm going to just add lines and then do it again. And then we'll see if it changes anything. Okay, so the first one that I did was this one. Okay, copy paste. Alright, and then let's just put a note here. After the UNISA errata. Okay, let's write down what they actually had indicated. Okay, I'm going to close this. I don't think we need that. We can always go back and look at it. I know you didn't complete some of the other ones. I did see it. I didn't go through it in a lot of detail, but I did look at your attempts, which is actually good. You actually did more than I expected, which was amazing. So good job.
Thank you.
Okay, let's copy that and let's paste that here. Okay, so that's what they said. They said 51040 was paid to the creditors in full settlement of their account. So that means that you're not going to take any discount into consideration. So you're going to record that as the amount that was paid, which is going to change this figure.
Yes.
Okay, because you'll be crediting bank. If you're crediting bank, you're debiting the liquidation account. Let me write that down. Debit liquidation. And all of this will make more sense. You can always come back and you can go through this assignment again, and you can try do it like a test, like an actual activity to try see if you'd be able to get it after we've covered the content. Okay, it's always nice to practice, and we'll look at past papers later on, but I'm not going to go back to these assignments because you've already got the answers. But you can practice and see if you can get them once you've covered the theory. And if you have problems, then we can go back and we can look at it. Okay.
Okay.
All right. So there we go. That's the credit for the bank. That's the debit for the liquidation. So they're asking us to change this figure. That's what they're saying. They're saying the full settlement, okay, of the actual account. They say the 51040 was paid. If it was paid, you're going to have a credit against the bank. So you will have 51,040 as a credit, and you'll have 51,040 as the debit. So this figure needs to change. 51040. There we go. Okay, I think that would have updated automatically. Just check the formula. Yeah, I did. Okay, so let's check. Is there an option for 46760? Let's go look at the... yes, there is. 41760 profit, which was number 2. Okay. And that was the same as what I had looked at there. Yeah. Okay. So basically, when I looked at it, I just said if you ignore the 5% discount, so if you take it out and you just use that as the amount that was paid, you get the right answer. So that was fine. Okay.
But I'm sorry, your answer is 46760. Correct.
This was 467.
Question 6.
Let's just check.
So it's option 1.
Minus. Let's just check this one. That one was also minus. Oh, okay, because this one ignored the discount. So if I ignore the discount, I didn't put 5%. So it's 51,540. And this one was 51,040. Okay, it does change it. So it's not the same.
Yes.
It's
So
4-6
it's
instead of
option
4-1. Okay, let's
yes.
go back.
So I think that's option 1.
4-6-7, 4-6-7. Yeah, it's a 6-7, eh? It's 1, not 2.
Yes.
Okay, so that's the right
Okay.
one, according to the errata, yes. Okay,
Okay.
46760. Let's write that down. There's it there. Okay, option 1, taking errata into consideration. Okay, that's the amount that's paid, that's the amount that had to change. Okay, what did I look at there? That was the long-term bank loan.
Yes, that's the 5%.
The 5% was for the bank loan.
Yes.
Oh, okay, yeah, that was the 5% for the bank loan, minus 5%. That was what we had there. Oh, okay, so I see what I did. If I'm just going back in time and I'm looking at my workings, when I first did the question, okay, that was my first attempt. I didn't get an option. Okay, then my second
Yes.
attempt was assuming no discount. Okay, but I see the discount was for the loan. There wasn't the discount for the creditors. The creditors were separate. So if we, yeah, so yeah, don't worry about this one. This one is obviously I was trying to get an option. So what I did is I
Yes.
just got rid of the discount and then I did get an option.
Yes.
Okay.
Yes. I see what you did.
All right. Yeah. So that makes sense now. I'm just trying to remember what I did when I did this. Yeah. So you're right. This is actually a completely different errata bit. Okay. It wasn't something that I had picked up on. Okay. This was my own possible errata for the question to get a possible answer that UNISA had in their working. Okay. All right. So that one is fine. That was 6. Was there anything else? Let me check. Number 7. Did I have a problem with number 7? Oh yeah. This was just a typo. I don't think they mentioned that, or did they? Let's see.
They did. They
Did
actually
they?
did mention that it was just a typo.
Where?
Uh,
Not.
Wait, I think if you scroll up, number 3.
No, they say it's
Oh no,
correct.
okay, wait, no. They actually did send it. I think they sent a new one. They sent it on an announcement.
Okay. Was it an announcement? All right. As long as you're happy that there
Yeah.
was an errata, because you can't get an option without the extra 0.
Yes. No, they did send that on an announcement that it is actually 14,000 because I
Yeah,
made a note of it.
140,000. Yes.
I mean 140,000. Yes.
Yeah, not 14. Because if you look at it, it looks very strange. That's why I kind of gathered that it must have been that.
Yes.
Here.
Yes, it is. It's 140,000.
Yeah, that was my initial thought when I saw this, because it looks like there's a missing 0 there.
Yes.
Okay, but yeah, I'm glad
So
that you
they did
confirmed
send
that.
it
So
to us.
that's fine. Then 8 is perfect. Then we don't have to change it. It's fine. Yeah. So this was okay. So the first attempt. Okay. That was 7. This is actually 8. Yeah. Okay. So yeah. So with 8, let me see. Did I show the first attempt? No, I didn't show the first attempt. The first attempt didn't work, and then I just wrote it down as a possible errata. So if you do change it, you do get this amount. It's the 302. That's the answer that you get, because you have to update this figure. You can see here in my working, it's 146,000 plus 140,000. Okay, so what I've
Yes.
highlighted in, let me not get rid of that working. What I highlighted in red is the typo. All right, so this working is fine as is. We don't have to change it because it's up to date now. The answer is then 302.
Okay.
Let's go back and check the options. Yeah, 302, so option 4 there. Okay, so 302 for the goodwill, and that's option 4. Okay, great. And then let's just see, did I have anything else that I raised? Number 9 was fine. Number 10 was fine. Yeah, I didn't have any issues with anything else. Okay, so yeah, those are the only ones that I had problems with. But now obviously the errata addresses it, so that's good. Okay, you need to fix their mistakes. It's just a pity that they don't get it right the first time. It's not the first time that students have had to amend and change these assignments. Yeah, I don't know why they
But
don't
the only
get someone to
scary
check
thing
it.
is
Pardon?
that they sent it to us yesterday and we still have to submit today.
Yeah, that's very unfair, hey, to be honest.
So,
Yeah.
and then I think there were 2 or 3 different posts. That's why I'm saying for the 140,000, it was an announcement. It wasn't on the PDF.
100%, yeah. As I said,
So,
yeah, sometimes you do find these things, but yeah, it's a problem, but hopefully they sort it out and they don't disadvantage any of the students by giving such
yeah.
late feedback. Okay. All right, Cheryl, are you happy with this? So you can submit what we've done here. Question
Yes.
one, you've got the options, you've got the answers. You can submit everything, and then as I said, later on, once we've covered the content, you can always go through this assignment on your own and then use it as like a inverted commas, like a test, and then you can actually check and see, well, okay, having covered the theory now, would I be able to draw up and create the same workings to get to the same answer? Okay.
Okay.
All right, awesome. All right, so I'm going to save that, and then I'll send that to you. In the meantime,
Please.
can you send me the updated PDF so I can put up the notes as well, so we can look at both my notes as well as the textbook, and then I can cover more recent examples with you, and then I can send this as well. Let me do that also. Okay, because you said
Sorry,
you're
what
not
are you, wait,
completing.
sorry, what are you asking me?
Can you send the study guide, electronic version of it,
This.
from the MyUnisa portal?
Okay.
Okay, let me send
Okay, let
this.
me just.
FAC1601. Just gonna write your updated assignment 1 semester 2 2020. Okay. How did you manage 1502 on your own? Did you go for lessons somewhere else, or
I
did you manage
actually
on your
did go
own?
for lessons somewhere else. It was
Okay.
just lessons around the corner, but I didn't find them very helpful.
Okay.
So,
Alright, so here's the assignment. I'm going to send you this file. Let me save it and I'll just close it and then we'll open up the notes. Okay. Which area are you from, Cheryl? Are you from Joburg, Durban, Cape Town,
Kempton Park.
Kempton Park? Okay, alright, on that side of the world. Alright.
Oh, are you not in Johannesburg?
I'm in Joburg, yes. I
Oh,
lecture as well for 2 institutions, so this is just my private business, yeah.
okay.
Okay. Alright, so the assignment's coming. Are you, let me see, you'd probably be second year because you're doing 1602, 1601.
First year.
First year. So, so you did
I'm
1502
studying.
last semester.
Yes.
Okay, got it.
I
Okay.
think I'm going to be with FAC because I'm studying finance.
Yeah, so you're doing a BCom or a BAc or a
BCom.
BCom. Okay, and you're
BCom.
specializing in finance.
Yes.
Okay. Yeah, well, those are my subjects. Those are the subjects that I can cater for in terms of, so investments, finance, those are my main subjects. Accounting I can do, but it's not something that I'm passionate about. So I choose to not do more than the first year or second year subjects in terms of accounting. But yeah, if you do decide to do other modules, I can assist with different ones. You've probably looked at my different options on the website. So I do cater for quite a
Yes.
lot of financial management modules. That's my speciality. Okay, I just want to upload the file. Okay, and then we can look at the rest.
Okay, I'm sending you the study guide.
Okay,
There
perfect.
we go.
All right, and then here's the assignment. Have you had any problems with the portal? I know you had some problems not being able to look at your resources, but did they sort all of that
I
out?
actually, for sustainability and greed, apparently last semester they had 7,000 students,
Wow, that's
and
a lot.
this semester they have 18,000.
Wow.
So I'm registered and I have the main module, but I'm not grouped.
Yes.
So I think that's a module that you need to be grouped for.
Yeah, is that module still online? Because I remember that when this was hosted previously, that the students used to have to log in and they had to like participate on like different discussion forums,
Yes.
and then they like marked it and things like that.
Yes, yes, yes. So
Is it
I'm
still the
not,
same?
so it is online, but I'm not grouped. So I can't do any of the assignments and things like that. So I know they're
Shit,
still
that's
having
bad. Yeah.
problems with that.
Okay, but have you raised it? So they're obviously going to consider your
Yeah, I did.
situation and
They
give you an
replied.
extension.
No, yeah. So all of us, there's I think about 2,000 of us that
Okay.
are going to get an extension. So
All right.
that's
Perfect.
happening.
Do you like that module? I know that module is very
Did
like
you get?
research based type thing where they talk about scenarios and like real world things and that. Cheryl, you still there? I lost your audio.
Yes, yes.
Okay, you are.
Oh, did you receive the study guide?
Yes, I've got it. I'm just saving it.
Okay.
2020, 1601. Okay, save. All right, perfect. I'm going to close the tutorial letter. We don't need that. This was the errata. We don't need that. Okay, and then you've got this one. All right, so, okay, I see they're using the 2019 version. All right, so they tend to update it year on year, but content-wise, this module has been the same for quite a number of years now. Yeah, all the modules are still exactly the same. Yeah, you're covering 1601. There is a 1602 as well, which I've seen some students complete, but 1602 is like a condensed version of 1601. 1601 is the better version. It's probably because you're doing a BCom, and that's why you actually have to do the more difficult module. So in terms of accounting, you've done the 1502 module, which is the best. You get 1500, 1501,
Yes.
1502, 1503. So 1502 is the most comprehensive, and even accounting students that actually study accounting at a second, third, fourth year level, even honors and so on, those students also need to do the 1502 module. So you've done the best accounting module, and then you're also doing this one, which is 1601. And for 1601, it's actually a prerequisite, so you can't do any of the finance modules if you haven't done 1601. So you do need to try pass this one this semester. It's an important subject, because if you don't, it's going to obviously delay some of your other subjects because you
Yes.
need this as a prerequisite. Okay, but you'll be
Yes.
fine.
Yes.
My main tip for you this semester in terms of your approach, I don't know what was
Yes.
your approach previously, but this is the approach that I'm going to take with you, is that we cover the theory, we go through all the content. Once we've covered the content, then we need to start looking at exam type questions, because you'll see, once you've done lots and lots and lots of exam papers, you get a feel for the questions and you can actually see what the examiner is trying to test. That's why I can pick up on possible problems and errors and errata in certain questions, because I've seen so many of these questions, so I kind of know what they're going to ask, and I know what they're wanting you to answer. Okay, so that's the challenge. The challenge for you is getting through as many questions as possible and going through the correct process. You'll see my approach to accounting is based on principles, because those principles cannot change, right? And that's why when you look at the first set of notes, this week is all revision, okay, basics, mainly from 1502 that spill over and fall under 1601, right? So you'll see none
Okay.
of 1502's content is discussed again in 1601, but they test it. So for example, depreciation. Okay, depreciation you would have covered in 1502, but now they're asking you questions about it in 1601. So that's why when you actually look at the course content, this introduction to the preparation of financial statements, okay, it's a very short section, but it's basically looking at 1502 again. And that's why I've given you quite a big bulk of notes, which basically come out of my 1502 course material. So I've taken 1502, and I've just basically, inverted commas, crash coursed it into study unit 1 notes. Right,
Okay.
so this is where the notes fit in. Right, so when we go through the content, the notes serve as a guide in terms of basic principles that you need in order to do later questions. So for example, preparation of financial statements, you've looked at a sole proprietor. The sole proprietor financial disclosure is key in terms of being able to calculate things like property, plant, and equipment, depreciation, debtors,
Okay.
creditors, inventory, etc. Right, all those individual subjects, even VATs. Right, that's also something that can come up again, but something that was covered previously. All right, so that's the context. Just remember that 1502 is your base. That's your most important starting point. Right, so to make sure that all the students, so sometimes I do get students from time to time that haven't taken courses with me before, and then take later courses, and then this is something that we need to establish right at the beginning. Okay, is basics, and I need to
Okay.
make sure that the basics are solid and that we can build off of those basics when we look at later chapters. Right, so the disclosures here again, you'll see it in Unit 2, and then it changes focus. You've got lots of partnerships. Okay, that's an important section. UNISA likes that in terms of past papers. Closed corporations, disclosure again. Disclosure. And then companies also, bit of disclosure, but mainly shares. Okay, so you'll see things like share capital, things like preference shares, those type of things. And that's what we'll look at. Branches is a unique separate section that's looking at different businesses, okay, that all fall under a head office.
Oh, like, are you talking about like franchises?
Yes,
Or
not
no?
quite a franchise, but similar. Okay, because remember, a
Okay.
franchisor and a franchisee relationship is a bit different because of the legal implications.
Okay.
So with the head office, there's no franchisee, right? You have managers at these different locations. So when you're talking about a franchisor and a franchisee, then you're looking at something like Spa. Okay, Spa runs
Yes.
a franchisor model because each of those little stores are separately and independently owned. Okay, but if you look at
Oh,
Pick
okay.
n Pay or Woolies or ShopRite Checkers, okay, all of those stores are controlled by the head office, and then each store runs, okay, as part of the large corporation. Okay, so the structure is a little bit different. So when you talk about a branch, it's not a franchise. Okay, it's almost like a subsidiary. It's like a separate business where you're conducting business, but you're still getting instructions from head office. Okay, so for example,
Okay.
if UNISA was based in terms of branches, so UNISA, I think they still have those testing centers, but everything went online. So last semester, you probably also wrote online assessments. All the students wrote online assessments. They didn't have to go to an exam venue. They didn't write exams like in a venue where you normally would, and there's like 300 other students writing. So
Yeah.
the branch is looking at the actual business, but like a segment or like a unit of the business. And it's still part of the same business because it's still managed and controlled by the head office. It's not privately owned
Okay.
or separately owned. Okay,
No,
so
I get what you're saying. Are you talking about like when people have different offices in different countries, but it's still run
Yes,
by the same? Okay, I get what you're saying. Okay.
that's correct. That's perfect. So
Okay.
if you have, so for example, if you have a multinational company, so like Microsoft would be
Yes,
a
like
US company,
Google or
but they have
yes.
a local, okay, branch in South Africa that services
Okay.
Microsoft products and devices and so on.
I think the best example would be a bank to explain it.
Yes, very good.
The
Yeah, banks as
banks. So
well.
yeah.
Yeah,
Okay.
so banks definitely have branches, and all the branches are obviously answering to head office. Yeah, so the branches you see around the
Okay.
country, all those branches are separate business units, but they all get
Yes.
combined into one head office and one reporting structure. So the financial statements for the bank, be it FNB, Nedbank, Absa, Capitec, Standard Bank, okay, the big five banks, those banks all have
Yes.
one set of financial statements, but they have hundreds or thousands of different branches. Yeah, you've got the understanding. That's brilliant. That's good. Okay, and then the last bit, the last section, is looking at cash flows. All right, and students struggle with this section. And this is an important section because UNISA always tests it in terms of direct or indirect. So you will get a question on cash flow. We just don't know what type of question you'll get and how complex the question will be. But in every past paper, you will always see a cash flow question. And the reason why students struggle with this is because of what we had earlier, FAC1502. Okay, not being able to draw up T accounts, not being able to find missing figures. Right, so when you look at cash flow, you're basically searching for bank. You're looking for bank in various accounts. Right, and we will look at all of this when we go through the content. All right, so you're identifying bank in different accounts. So for example, in an account like debtors, can you see bank there? Yes, you can. Right, what cash flow will you get from a debtor? Well, it will be an inflow. And then if it's an inflow, you would debit the bank, and then you would credit the debtors. Okay, so ideally, you'd be looking for bank here on the credit side of debtors. So when you look at cash flow statements, when you look at those types of questions, there's different ways of doing it. You can follow the textbook approach, where they look at rules. So they tell you, study this, when you have this, apply that. Okay, that's one way of doing it. Right, you can do it that way, but the only problem with that method of studying, and that's the difference with my method and other methods, is I base it on principles, because you'll see, once we've covered this week's session, you'll have everything. I'm going to go through all of this with you, so even though I didn't assist you in the past, it doesn't matter. The point is you've got everything now, and you can see the approach. Okay, I base everything on rules and principles, because then you only need 6 rules and you need 6 principles or definitions. And then you can do anything accounting. It doesn't matter how far you go with your studies. If you do want to be a CA at some point in time and you want to take your studies further in terms of your accounting, then you just build on the basics. Okay, it just gets more complicated or more complex in terms of the disclosure. But all the principles stay the same. Okay, and that's very important to understand. All right, so when we go through your course material, you'll see we only have, in total, 9 study units to get through, and then we've got lots of activities. I want to go through all the activities with you so you can actually see how to do the questions. Right? And we've got time, so that's why we've structured it so we can go through everything, and then we can cover past papers and assignments later on. All right, so I'm going to put up my notes, and let's have a look at the theory. Okay, so I've given you notes on different sections, and each section covers the basics that you need for that particular section. Then we need to look at the practical questions, and then that's where the actual study guide comes into it, because then I'm going to use the study guide and we'll go through questions and we'll look at disclosure and we can cover practical questions, because that's where the knowing becomes practical, okay, where you actually get to do the questions, and that's the challenge. As long as you've covered the theory, then you just need to practice, practice, practice. Right, so there's a slide here talking about the, okay, this is just background regarding the business, okay? This you've probably seen on the website. I'm going to leave that. You can look at this. Yeah, this is obviously the weekly support package. So you've got live classes, you've got the support material. I'm going to take you through sample questions and activities. Minimum, we'll do 2 past papers, okay, from start to finish. I've got content from before that I'll give you access to as well, but later on, not now. Okay, so you'll get a whole exam pack with previous past papers that I've done already. Some of them I've got videos for, some I don't, but I've got solutions to all of them. So then that you'll get, and that can help you as well in terms of preparation. Right, please contact me if you have any problems. Okay, like what we did with assignment 1. Okay, we spoke on the phone, we spoke on WhatsApp. Let me know what you're struggling with. So week on week, if you're just keeping up and you're going through each of those study units and those chapters, you'll be fine. Okay, by the time we get to I think November, when you're starting to prepare for exams, okay, well, we probably would have covered content before then. So there'll be at least 3 weeks, maybe 4 weeks, maybe even more, depending on how quickly we progress through the lessons, right? Because it's private, it's just you and I, and it's not a group lesson. I can focus on you in terms of what you're struggling with and what you're okay with. And then we can either progress quicker or slower. It all depends on you. All right, so some of today's concepts might be very simple and very easy, and we can go through quite quickly. But again, I need to gauge what areas do you need more help with and what areas are you okay with. So for example, if you need more help on depreciation, then we can look at that. Right, but you even spotted an error in my solution where I had omitted the accumulated depreciation because of the diminishing balance. That's a good sign. Right, so already that tells me that your ability to calculate certain answers, okay, from a 1502 point of view is good. Okay, your ability to calculate depreciation is good. Okay, hopefully other subject or other topics as well, adjustments, inventory, perpetual, periodic, all of that. I'm hoping that you're okay with those. Okay. All right, just a note, you said you are going to be studying some more finance modules later on. So this is my recommendation in terms of calculator. UNISA tends to recommend HP and Sharp. Okay, you don't.
No, I have the Casio.
Yeah, you don't need a financial calculator for this module. Right, before you did. Right, so this module was a lot longer than what it is now. Okay, you saw the contents page in the 2020 version. Right, it's the same as the previous year's study guides, but they've taken out certain sections. So in the past, around 2-3 years ago, UNISA had a section in this course that actually covered financial mathematics. Right, but they haven't included. So I don't know if you've done those courses yet, but there's a good one. There's a course called DSC 1630. That's brilliant in terms of financial mathematics. Right, it's all calculator based, and this is the best calculator for doing financial mathematics. Right, WITS uses this calculator. That's what they prescribe. Okay, Sharp and HP is prescribed by UNISA. UJ recommends the Texas Instruments. Right, different institutions recommend different calculators. I don't mind which one you've got. It doesn't matter. They're all the same. Right, if you need help using your calculator, I'll show you how to use your calculator. But you don't need it for this module. I'm mentioning it because in the future, if you do decide to study more financial mathematics related courses, okay, and those courses cover FIN, right? So FIN courses need a financial calculator. INV courses need a financial calculator. DSC 1630, anything relating to financial mathematics needs a financial calculator, right? So this is just my tip, okay? You can do it with any calculator, it doesn't matter, right? But my suggestion for students, if they do want to use the best calculator, the Casio is the best because it's kind of like a computer. You've literally got menus and you can actually open up kind of like small little windows and things like that. It's quite a fancy calculator. And the price is similar to all the others. It's around about the same price as the Sharp, HP, and Texas Instruments. All right, so if you're looking towards the future, when you do start studying DSC, if you've done it, have you done DSC yet? Or have you done
No, I
the
don't
other
think
one,
I
the
do
maths
DSC.
module, the 1520?
I haven't done DSC at all.
Okay, you haven't done any of them. Interesting. And it's not
No,
part
and
of
I
your
don't think
syllabus. Not part of
it's
your...
not. I don't think it's part of my syllabus.
Wow.
It's not.
Okay. Interesting. All right. So
But
maybe
Finn is.
yeah, I know Finn is. You mentioned that. So sometimes these modules are part of the actual degree that you're doing. Okay. Lots of students have covered 1502, 1630 before. So I'm very familiar with these two modules. And I know that this module is brilliant in terms of financial mathematics. Right. It's great if you've done it because it helps you to do finance, investments, and DSC. But if you haven't done it, it's not a train smash because in those separate modules, okay, so in FIN and in INV, okay, we do go through the workings, but the workings aren't as in-depth as the DSC. It just takes it to another level, that's all. Okay, so don't stress. Let me not frighten you or create any anxiety. I'm just mentioning what I've seen in the past. Okay, so some students have had DSC 1630 as part of their courses that they've had to do, and then later on, when they've done accounting or finance or investments, those students have done that module. Then it's easy for me to relate it to something that they've done, right? So I always like breaking it back to basics, okay, keeping it simple, okay, and keeping it principle based. All right, so even with finance and investments, it's all based on something. It's always based on those principles. So when we look at like equity and we look at valuing shares and things like that, it's all based on time value of money, right? And did you do, let me think, yeah, you would have to have done pure maths at school. in order to have done some of the financial maths. Did you do time value of money at school? Future value, present value. Does that ring any bells? Or did you do maths lit at school?
No, I did maths. I did core maths.
Okay, if you did core maths, you probably had that as part of your syllabus.
Future value, but I don't think it was a big part.
It wasn't a big part
of our syllabus.
It would have been a part of the syllabus.
Okay.
Any of that?
No, so what are you saying? Present value.
Yeah, present value, future value, time value of money, annuities. Does that ring a bell?
Kind of, but I think I forgot it.
Yeah, it's fine. I'm just trying to ring some bells from before in terms of like principles, concepts that you would have covered. So those concepts get covered again later on in other modules. But as I said, they cover it, but just not in as much detail as the other modules, the maths modules. Okay, so yeah, they might have changed, or they might have given you options, so maybe you can choose different subjects rather than leaving it open and asking students to cover certain modules. Okay, all right. Just some guidelines in terms of success. If you want to do well, I know you said you got a 70 in your first accounting module, the 1502 module. You can hopefully do the same or get the same result and do just as well in this module if you just follow the right tips. Okay, so pre-read if you can. Pre-read means go through the textbook, go through the study guide. Make notes. You don't have to make too many notes because I've given you notes. You just need to add to them. Sometimes I've asked questions and I've left it blank and then you might have to add something. But the notes that I've given you serve as guidelines to help you guide you through the theory, to cover all the concepts. Additional reading and practical application, more for later on when we actually look at past papers. Okay, try get your hands on as many past paper questions as possible. UNISA should be posting them soon, not at the beginning of the semester, but normally about 5 weeks into the module. Normally after they've done the second assessment, then they start posting past papers. But you can always remind them. You can send something on the discussion forum, send an email and ask them, when are we going to get past papers? Can you post past papers on the platform? Because those are very important. Then you can actually see the right exam level questions that you can do. Because the textbook questions are fine, but the textbook questions in most cases are a little bit easier and also are a lot longer. So when you look at exams, they kind of test sections. So they might take one disclosure part of the question and put that in an exam rather than test everything in the actual textbook. Right, and then if you have any questions, stop me at any point in time. The chat is also available here. Did I share my screen? Yeah, the screen is up. I can't. Let me just shrink this. Can you see the screen, Cheryl?
It's on road to success, if that's what you're talking about.
Yeah, I'm just trying to find where's my menu options here for the Zoom. Okay, but yeah, you have the audio, so it's better to just use the audio. But yeah, stop me if you have any questions and we can look at it. And this is just from a UNISA point of view. If you can try and engage in those discussion forums, it does help. Sometimes they do post important notes for students to be aware of. Okay. All right, so let's test your basics. Let's see how much of 1502 you're still comfortable with. I've got a few questions here that I want you to answer, and let's see. So I want to gauge your 1502 basics, okay, your foundation. Cheryl, what is accounting?
Like the proper definition or my understanding?
Your understanding of accounting. You don't have to define it perfectly, it's fine. I just want to get an idea of how do you view accounting? What is accounting? What does it mean to you?
For me, I think, accounting would be, I know it's a lot about like disclosure and information to do with where we place things regarding money.
Yes.
Can I say that?
Correct, you can. So what about the money?
What do you mean, what about the money? Like,
What are you doing with that money? So you're saying it's information, but how is that
yes,
information organized? How is that information prepared? Can you elaborate? Do you know?
not really.
Okay, so accounting is all about disclosing information. Right,
Okay.
so remember, where does that information come from? It comes from a system. So when we look at accounting, accountants just create information that can be read and interpreted by other people. Right, so for example, in
Okay.
financial management, you cannot do financial management if you don't have accounting, because you will see financial statements, you will do analysis, you would have to do some sort of analysis in order to measure performance, right? Profitability, liquidity, etc. Right. So when you look at accounting, accounting is just a system for creating information. It's data that has been processed in a way that we can interpret that information. Right. Another way of looking at accounting, you can talk about it as a language of business. Right, so maybe you can speak multiple languages. Right, why is it important to speak the language of accounting? Well, it's because of business and the transactions, the information, the analysis that we need to do for this particular subject. Right, so when you look at accounting, accounting is based on rules. It's like speaking a language. Okay, we've got verbs, we've got nouns, we've got adverbs, we've got adjectives, etc., etc. Right, those are different types of words that can be used to create sentences. Okay, and we can create sentences and we can then write paragraphs and we can write a book. Okay, so accounting is just that. It's a system that's going to assist you with presenting information that can be used by different individuals, okay, or different institutions, different parties. Right, so accounting is rule based, and accounting comes from IFRS. Okay, those are the
Okay.
rules that we've or that we'll see that we'll actually use in the subject. Do you know why it's important? So, why is accounting important? What does this information help us with? Any idea?
I would say to manage like your
Yes.
finances in a business.
Okay, very good. Yes, management is
Yeah.
something that you could mention, but more importantly, it's the decision making.
Okay.
Okay, so can you make good decisions without information?
No.
No, you can't. Okay, and that's why accounting is so important for BCom students, is because it's the information relating to business. What is the data? It's transactions. Right, so during a financial year, there'll be hundreds or thousands or millions of different transactions. Those transactions are going to have a certain effect on the business's operations, okay, on the business's bottom line, on the business's financial management. Okay, so the decision making is important because if you've got the right information, then we know that we can use it appropriately and we know where to use it. That's the important bit. Okay, so where is accounting used? Well, in many areas. Right, the most important ones: finance, investments. Okay, budgeting as well. So that's finance, but finance and operations combined. Okay, so operations is part of that consideration. Okay, when you operate, you need to consider resources. Do we have sufficient resources in order to achieve a certain goal? How do we achieve those goals? We need to allocate resources. So how much goes to project A, how much goes to project B, how much goes to C, D, and so on. Okay, so accounting is used in many areas,
Okay.
even tax. I don't know how many tax modules you're going to have to do in your specific BCom, but tax is another area where accounting is used. Right, so SARS, okay, how much are they going to tax you as a business? How much are they going to tax you as an individual? How much are they going to tax you as a partnership, okay, or a CC, or a non-profit, okay, all the different forms of ownership, right? Some businesses get taxed more than others, so those are the things we need to consider, right? So the point of this slide is to get you to appreciate how important this particular course is for later ones, okay, for other ones. So you're probably not going to do more accounting. It's probably 1502, 1601, and then that's it. Okay, you might have to do some of the second year modules, but I don't think so. If you haven't chosen to major,
No, I actually
you
do.
don't have to. Sorry, say that again?
I have it for next year as well.
Okay, you have it for next year. Okay, so you've chosen more of
Yes.
those modules as part of your selection.
So
Yes?
it's part. I don't think I chose. It's part of
You haven't
my
chosen.
degree for
Okay, so
finance for next year.
It's what you have to do.
It's a compulsory. Yeah.
Okay, it's a compulsory module. Okay, all right. So yeah, so you'll see it'll just expand. You'll just use more of your knowledge of information and creating it and disclosing it. The disclosure bit was the biggest point that we needed to write there. Okay, so what is accounting? Disclosure. Okay, of information or the language of business. Why is it important? Decision making. Where is it used? In lots of different areas. Okay, should we follow the same rules? What do you think?
Yes.
Correct. Okay, rules have to be the same. Why? It's because the information needs to be consistent. You cannot have a scenario where an asset is an asset for let's say a sole proprietor, but it's not the same for a partnership. That's bad. Okay, then there's inconsistencies. So when you have rules, the rules are based on the language. Okay, the IFRS. The IFRS I also refer to as like a dictionary. Right, so think of speaking a language. Okay, you have a dictionary that gives you the definitions for different words. The same applies in accounting. IFRS is set by the International Accounting Standards Board, okay, and they set all those rules. And then hundreds of countries in the world use the same rules to represent accounting information, financial information, transactions, okay, business. Any of those transactions have to follow those rules and have to be disclosed appropriately. Okay, so IFRS is international. Lots of countries use the rules, and they're all the same. It's consistent. What is the conceptual framework? Do you still remember that from 1502? What is that entailing? What does that describe? What does it involve?
Is that the layout?
Yes. Okay.
Yeah, the layout of.
You're right. Okay.
Your
Conceptual
statement.
framework is looking at how, okay, certain financial statements are presented. So that's looking at those, like faithful representation, comparability. Let me think of others. Reliability, materiality, right? All those characteristics. Did you keep your textbook from 1502 or did you sell it to someone secondhand?
We didn't actually get it. We didn't have a textbook. We just had the study guide. So I have my study guide.
1502,
yes.
They didn't prescribe volume 1?
Nope.
Okay, so you need
to send you the tutorial letter.
Yeah, shame. Sorry to say that.
But that's what I'm saying. So I didn't have a volume.
Wow. Okay. Yeah, that's not a good sign. UNISA used to prescribe volume 1, and then volume 2 is obviously for this module. Okay, but the volume 1 was actually very good. They covered all of the theory regarding accounting and some of the backgrounds. All right, but it's not a problem. Okay, as I said, I just want to gauge your understanding in terms of this course material so that we can look at concepts later on when we look at it. Okay. All right, let's look at the first bit. This I'm going to go through quite quickly because it's background regarding scope covered in Study Unit 1. The first bit we need to look at is this, accounting records. So, do you remember the accounting cycle?
Oh, yes. So, like where transactions place, and then you journals.
Transactions, where did you say they go? Or what's the next step? That's number 1.
I think number 2 was it not? Was that 3? No. Oh my word, I forgot it. But I know more or less.
Source documents.
Source documents, and then it's journals.
Yes. And then?
And then I think it was adjustments.
Not quite. Journals.
Oh, is that 5? Oh, your ledger.
Very
Sorry.
Good. And then
ledger.
Talk about adjustments. Yeah, and then that's the trial balance. The trial balance would deal with the adjustments.
Yeah.
And then the ultimate.
Okay, and then it's your financial. So your financial position or, yeah.
correct. Very good. Okay, so yeah, so this is what this slide is dealing with. This slide is communicating the importance of keeping good accounting records. Why do accountants follow the system? It's because there is, inverted commas, a paper trail. So maybe you have an auditor in your family, or someone who's a CA, or someone who's in that line of work. Okay, auditors confirm and they check that all the accounting information that's been presented. So in other words, they're giving us peace of mind that the financial statements are correct and we don't have any problems with the accuracy or the reliability of the statements. That's what an auditor does. They're literally looking at those, other way around. They're looking at those statements to make sure that those statements are correct. Okay, they're inspecting those statements. Right. If they inspect those statements need to be reliable and accurate. Okay, they're checking for reliability. They're checking for mistakes. Okay, so an audit is just a check, right? And what is that check involving? It's a process, right? So they're looking at those source documents. An auditor would have to select a sample of those source documents to confirm that all the checks and balances are in place to make sure that the accounting records are reliable and accurate. Right, so this is what this slide is talking to. It's talking to the process. Okay, accounting records have to be recorded in a specific process, going through the system, and it needs to be based on historical information, things that have happened, not things that will happen. Right, you need to have evidence. Evidence refers to the source documents. Right, if we don't have a transaction with a source document, how do we know that the transaction has actually taken place? Right, and those are things you need to consider from an information creation point of view. Right, you're creating information that people are going to use in order to make decisions. Right, and the way we communicate that information is important, and that's where we have the disclosure. Right, so the question over here is, who uses the financial statements? Can you give me users? Some users.
I remember this. It's investors.
Very good. That's one. Can you give me one more?
I cannot remember them, but I remember reading it.
Okay. Government? Does government use financial statements?
I'm sure they could, but I don't know why. Why would?
Okay, why would they? Think about SARS, government. Tax.
Yeah. Okay.
Right, so
Okay.
As a business,
tax. Yes.
All businesses. This is something you'll cover later on when we look at companies. 28% tax. That's the rate that companies have to pay. Right, individuals, it's different. Okay, individuals pay tax on a sliding scale. Right, the more you earn, the more tax you pay. Right, it's a progressive system.
Yes.
Right, that's the tax system that we have in South Africa. Right, so government can use it. Investors can use it. Suppliers can use it. Consumers can use it. Right, banks, okay, financial institutions. Right, almost everyone uses financial statements in some way or another. So the importance is why. That's the key. Right, so when you look at why, the why is the purpose. So if you are looking at tax, what would the government want to look at? Would the government look at your assets and liabilities? Not really. They would look at it if you were maybe under an audit. Okay, let's say you were being investigated because you're not paying lots of taxes, but you've got lots of assets. All right, they call that a lifestyle audit. Okay, maybe you've seen that in the media. Right, certain government institutions, certain ministers and that have been asked to go for lifestyle audits, okay, because of certain investigations and so on. Right, but the point I'm trying to make here is SARS is going to want to know what? Income minus expenses. Right, so for them, the income statement or the statement of comprehensive is more important because it's the purpose, it's why they want that information. Right, they might look at other things, but they're not really going to want to look at your cash flow statement. Right, cash flow versus statement of comprehensive income. For them, looking at your profit or loss is more important than looking at how much money came in or how much money went out. Right, if we're looking at, let's say, a financial manager, okay, the financial manager would be looking more at the cash flow. Do we have enough cash to continue operating? Right, because maybe we have a recession, okay, or we have a lockdown, okay, we have COVID-19 and there's a global pandemic, and now the business isn't open, okay, we cannot operate. So are we going to make a loss? Yes, we will. Okay, you might still have expenses to pay for, but you don't have the income because you can't sell alcohol, you can't sell tobacco, whatever the case might be. Okay, it's obviously changed now because of level 2, but I'm just using that as an example.
Yeah.
Okay, so if you understand why somebody needs that information, then you'll understand what information to look at. Okay, and that's what I want you to consider when we cover this module, because each and every section is going to deal with a slightly different consideration. So for example, if I'm looking at partnerships, okay, and if I'm looking at a change in ownership, now I need to know, well, what must I look at? Okay, do I have to look at the capital? Do I have to look at the assets? Do I have to look at the liabilities? What do I have to look at? Because that's what I'm dealing with, right? So the purpose is key. So I'm mentioning this now because you'll see, if you understand why you're doing something, then you'll know what you need to look at, or you'll know how to approach it. And that's important, and you'll get better at doing that when you look at more practical questions. Okay, that's the difference between knowing and doing. Okay, if you've got the knowledge, if you know what accounting is, if you know what the rules are, then you can apply it in different scenarios, and you can see, well, okay, this is why it's so important. Okay, I need to look at this, or I need to look at that. Okay, the last bit, what forms of entities do we have? Do you remember the 4 types of businesses, forms of ownership?
So sole proprietor, partnership, closed corporation, and companies.
Perfect. Well done. Those are the 4. Well done. There is another one though. Okay. You covered this in FAC1502. Do you remember your non-profits?
Yes. Yes.
Okay. Remember you had clubs. You had like a golf club or a tennis
Yes.
club. Membership fees.
Yes.
Remember all of that stuff?
Yes. Yes.
Okay. All right. That's also a form of entity. All right. A non-profit, and what did they call those businesses again? Let me think of the right name. I think they even called it non-profits. I think it was non-profit entities or non-profits. I don't think they used government, NGOs. They used profits. Okay, I'll have to go back and look at my notes. But anyway, the point is there are lots of different forms of entities. So why is that important? Well, remember we spoke about accounting rules. Do the rules have to be the same? Yes. Same rules. Okay, but different layout, format, or disclosure. All right, so that's why when you asked me about, when we spoke on the phone about the assignment 1, you were quite nervous and anxious, and you were worried about not being able to do it. But look how well you did.
Yeah.
You managed to cover quite a lot of that assignment, considering we haven't even looked at any of the content yet. Okay, so you can give yourself a pat on the back. Your basics are good, and it's important to have those basics, because it doesn't matter how far you go with accounting. The only thing that will change is this, the disclosure. When you cover more accounting, you'll learn about other things. Okay, if you said you do more accounting, this is something you'll cover later on then, an intangible asset.
Okay. So like a brand name.
Sorry?
Yeah. Like your the brand names.
Yes.
That's
like a brand or a website.
Yeah.
Okay? Or a copyright.
Yes.
Okay. All right. Those are things that are intangible. Okay. It's not property, plant, and equipment. Okay. PPE?
Yes.
1502. All right. That's tangible. Right. Intangible? That's a separate module. Okay. They cover that in a different module. But I'm just giving you an idea of how important it is to keep things simple. Right. Don't overcomplicate it. Always break it down to its rules and its principles. Tell me what the actual account is. It doesn't matter what the account is. If it's a website, it's still an asset. if it's a copyright, if it's a brand,
Yeah.
if it's a trademark, it's still an asset. As long as you know it's an asset, you'll know how to treat it, you'll know how to use it, you'll know how to transact with it. Okay, there's such a lot you can do with it if you keep it simple. Okay, so always keep it simple. You'll see when we cover the rules, I'll show you everything you need, and that's all you need. You just need the rules, and then you need to apply it. That's the hard part. Okay, the easy part is learning the rules, okay, or covering the rules. The hard part is applying it. Okay, all right, so here I've put a note about the nature of accounting. Nature of accounting means the basics. Think about nature, right? Think about like those elements in nature, things that are present in nature that cannot be changed. Okay, principles. Right. So when we look at the nature of accounting, it's looking at the specialized means of communication. It's special because it relates to transactions. It relates to business. That's what it looks at. Okay. When we look at accounting specifically, now we're being more direct. Okay, we're looking specifically at an asset. We're looking specifically at a liability. It's like what I said earlier, it's a language. Okay, if you're studying English, now you're looking at a noun, or you're looking at an adjective, or you're looking at an adverb, whatever it is. Okay, it's more specific. And this is what you're going to be looking at, because you're going to be covering specific types of information, right? Partnerships, CCs, companies. Okay, it's specific. So we need to know what language do we need to use for those different types of businesses. So when I deal with a partnership, okay, I'm talking about partners and not owners. Okay, if I'm looking at a CC, now I'm looking at members and not partners. If I'm looking at a company, Pty Ltd, now I'm looking at shareholders and not members. Okay, so just remember that when you deal with accounting, it's just the vocabulary that's used in different scenarios to convey or to express that financial information to the users that need to make a decision. So why is knowing how to understand accounting language important? Why is knowing this language important? Any idea? Why do we need to convey the financial information? Any idea?
Consistency, maybe, or to make. Wait, so wait, what are you asking me? Why do we need?
Hey?
Why do we need to understand accounting?
Yes. So if you know how to speak this language, why is it so important? There's a clue here on the slide.
There's a clue. Can I say consistency?
Yes, you could, but
Is it
with regard to what? You're on the right track.
with the layout? To compare layouts?
The financial.
Is that okay?
Good. Yes, the layout.
Okay.
Nice. Okay. The layout or the financial reporting. The report means the end product. Okay, so you're never going to do accounting later on, okay, if you're going to be in finance or if you're going to be in investments, right? But you're going to be looking at all these reports that other people are creating. Okay, so someone will give you a income statement, someone will give you a balance sheet, okay, and with those statements, you're going to be deciding on whether to invest, whether to finance, whether to do whatever. Okay, well done, good. Okay, just to elaborate on that point further, here's the revision notes. Okay, you know the process. You know it's going to entail 6 steps: financial transaction, source document, journal, ledger, trial balance, financial statements. Ultimately, you want to make a decision. Why? It's because you're using that information. Remember, this information is useful information because someone has taken hundreds or thousands or millions of transactions and they've reduced all of those transactions to maybe a 1, 2, 3, or 4-page financial statement. Does that make sense? Right, so your ability to interpret what's on the financial statements is very important, because you have to be able to understand what information is being disclosed to the user. Have you ever looked at real world financial statements, Cheryl?
I wouldn't say world, but I have seen business statements before.
Okay, good. Yeah, so if you've looked at some business statements or business reports, you've probably seen like different line items that are relevant or more relevant or less relevant to a particular individual.
Yeah.
Yes. Okay, that's a good example. So you will only see more of this as you continue to progress. When you do other subjects, then the focus changes slightly, but the basis is important. As long as you've got this understanding of this language, you can do anything later on with it. Right, there's the revision note about the different types of businesses. Will the accounting be the same for all types of businesses? What do you think?
Yeah.
Yes. Okay, when you say yes, what will be the same?
Like you said, the basics, like an asset will stay an asset.
100%.
But then the disclosure would be different. So
well done. That's brilliant. Nice. Good answer. If you went with no, that's also correct. And then you would just talk about the disclosure. As you said. Well done. Good answer. Forms of ownership, you've got all 4 here. This one was covered in 1502. So you're not going to see it in 1601. Okay, the ones in blue, these ones come up in 1601. And that's what you're going to be looking at. Right, so partnerships, big section. We saw it earlier when we looked at the contents page of the textbook. You can see there's 3 chapters covering it. CC is also important, companies also important, but not in as much detail. Okay, they don't give you as much content relating to those 2. And then the last question, will these types of business follow the same rules?
Yes.
Definitely, they have to. Correct. Right, so what are the rules? We're going to look at them now. The first thing I want to look at, recap from before, recognition versus measurement. What's the difference? What's the difference, Cheryl? Do you know?
I don't think so. Did we do? I don't think I did this. Recognition and measurement.
Yeah, this is theory. This would have been covered in the textbook. That's why it's a bit of a pity they didn't recommend the volume 1 for you guys last semester. They must have changed it in 2020.
Yeah, because that's the thing. I don't know.
Okay. Let me ask you this. When you covered the inventory chapter, okay, when did you recognize inventory as being inventory? Let me ask you that question. When is inventory?
So, when was inventory? When is inventory?
Or tell me what inventory is. Let's start there.
It's okay. So inventory, it would be goods for resale.
Very good. See, you've covered the recognition. That's recognition. Recognition is knowing what account you're dealing with. All right, so when you look at accounting rules are standard. There are only 6 accounting rules. Asset, liability, income, expense, capital, drawings, that's it. But now, with those accounting rules, you get different things that you have to recognize. So accounts can be broken up into different types of things. I want to call them that, just for now, okay? They're an account. So for example, inventory is an account. A business will have an inventory account in their general ledger, okay? So when you look at the recognition means, what am I actually dealing with? Am I looking at inventory or am I looking at property, plant, and equipment? Right. If I'm buying and selling cars, am I going to record those cars as vehicles, or am I going to record those cars as inventory? Which one will I record them as?
Inventory.
Very good.
Inventory because you're selling it. Yeah.
100%. Do you see the difference?
Yes.
Okay, that's
Yes.
the
Okay.
recognition. Recognition means, do you recognize, do you realize what you're dealing with in terms of the account? Right, another example. If I sell something for cash versus I sell something on credit, I need to either
Yeah.
recognize an impact on bank, or I need to recognize an impact on debtors, because I have a sale. A sale is a sale. Okay, but
Yeah.
how you sell can differ. And that's what the accounting rules look at. You need to be able to recognize when something applies. So when does inventory apply? When does PPE apply? Well, if I'm using the vehicle, then I'm going to have PPE and I'll have a column for vehicles, because I need to account for the use of the vehicle, not the vehicle as a form of inventory that I'm going to be selling. Does that make sense?
Yeah.
Okay, perfect. Right, so that's the difference between recognition and measurement. Measurement looks at the quantification. Right, you're actually going to be quantifying, basically. All right, you get quantitative analysis and you get qualitative analysis. Okay, so measurement is looking at the actual numbers part of it. All right, so now that I know I have inventory, how am I going to measure it? Am I going to measure it according to perpetual, or am I going to measure it according to periodic? Same thing with PPE, okay, property, plant, and equipment. How am I going to measure my vehicles? Am I going to measure vehicles according to costs? Am I going to measure vehicles according to carrying value? And then when I process depreciation, how am I going to calculate that depreciation? Cost method, which is straight line, or carrying value, diminishing balance. Do you see the difference?
Yeah.
Okay, and that's something that I just need to establish up front, just to give you scope. Okay, I'm just covering concepts from before, just so you have nice context. So when we look at other things, when we talk about recognition and measurement, it kind of makes sense, and you can kind of relate to it now than maybe before. Okay, all right, policies. You'll see some of them in the textbook. In 1601, you'll see when they disclose information. You'll even see it in your actual study guide. Okay, the one that you have. I think you're also using the electronic version, because they wouldn't have sent you a printed one yet, right?
Yes.
Yeah. So if you look at the electronic version, you'll see they give you these policies towards the end of the financial statements, because you need to communicate to your user that you're following certain rules. For example, I'm using perpetual, or I'm using periodic, or am I using a cost basis, or how am I depreciating my assets? Okay. Right, and then the big note here in blue, disclosure. Right, why have I put it in blue? It's because all your exams will request you to disclose information, either disclosing information for a partnership, a CC, a company, it doesn't matter. Okay, but you will see in past papers, they always ask you for disclosure. When you did 1502, in that module, you had shorter questions. You had a bank recon. You might have had a question on inventory. You had multiple choice perhaps. Right, but long questions, okay, you didn't have much disclosure. They might have given you one question, maybe when you looked at the non-profits and they asked you to show the income and expenditure, that type of thing. Or maybe there was a disclosure question, but it was a short question. The whole exam wasn't disclosure. In this particular module, the whole exam is disclosure, but you're just disclosing either cash flow, partners, members, companies. It all depends. Okay, so disclosure is very important. And that's why when I emailed you all the notes, I emailed you templates as well. Okay, I'm going to use templates when we do practical questions, because it's quicker and simpler. Okay, I don't know if they'll change your exam, because obviously we're in level 2 now. By the time we get to November, I don't know if it's going to change or if it's going to stay the same. I don't know if you will still have online assessments, or will you have to go to an exam venue and write a written exam. Okay, in the past, I'm just speaking from last year. Okay, last year, exams were all written. Students had to go and write on a particular, what do they call them, exam testing venue, okay, and they had to draw up all of these statements. Right, so I'm just mentioning it now, just something for you to consider, because you can decide what works for you. Do you want to use your technology so you can use Excel as well? You'll see I use Excel a lot. You said you watched some of my videos from YouTube. Maybe you saw some of them with Excel workings and things like that. So I use that a lot because it's easy, it's convenient, and I don't have to sit with a calculator trying to add up all the numbers. I can just add it in Excel. It goes quicker as well, and you can follow and you can see what I'm doing. Okay, so I've given you those templates, and I've given you PDF versions of it, because normally I ask the students to print it out, okay, and then the students just fill in and answer and do questions and that on those templates, and then they get familiar with them. Because if it's written, you're going to have to do the same thing. You're going to have to draw up those templates, and you're going to have to answer the question if it's an exam venue. If it's online, it's going to be different. Okay, they might send you the question paper, or they might do multiple choice, however they choose to do it, but it might be a bit different. Right, so this is very important for this module, because all your exam questions will look at disclosure. Okay, is that all right? Are you okay with that?
Yes.
Yeah, so just find something that works for you. If you like using paper, then print out a few of those templates, and you can use them when we do practical questions later on. Okay, I'm just going to use Excel. You can do it with me if you want to. You can follow with me. It's up to you. Okay. As I said, I'm recording this. I should actually just double check. I didn't open because I started the video. I'm sure it's fine. Let me just see here at the bottom. Oh no, I can't check it on the other screen. It's fine. Don't worry. Don't stress. Okay. This is something we need to consider for exams. Okay. All your exams need a template. All your exams will need disclosure. The sooner you get familiar with it, the better. And it's quite basic, but as we said earlier, in certain scenarios, certain line items might change. And we just need to be mindful of that, so when we deal with different types of businesses, we'll know how to disclose the information. That's all. Okay, and then I've just put 3 notes here. IFRS accounting standards and GAAP and SICA. This is just background. Okay, this is theory that you could maybe find in a textbook. Okay, obviously a volume 1 textbook, not this one that you've got. Okay, GAAP was the old system of accounting. Okay, so once upon a time, South Africa had its own rules for accounting, right? And then what did South Africa do? They brought the rules in line with the IFRS, International Reporting Standards, right? So today, as we sit here today, okay, all companies in South Africa, public, private, CCs, it doesn't matter, okay, we use an international system. We use rules that come from the International Financial Reporting Standards, IFRS. And that's why it doesn't matter where you go. Okay, maybe you decide to go to the UK, Australia, New Zealand, South America, wherever, it doesn't matter. Okay, multiple countries. I think it's around 100 and you'll have to Google this, but it's about 130, 120, 130, somewhere around there. But 120 different countries use, plus minus, okay, IFRS. And that's why it's such a universal concept, and you can use it anywhere. It doesn't matter where you are. But even Americans use a system, rules, but the Americans use their own generally accepted accounting principles. Okay, they use GAAP, but US GAAP. Okay, not South African GAAP. Right, this is just context. This is background. Right, so you're studying an international language. Okay, it's like English. Okay, all countries in the world, okay, want to speak English because English is a universal language that's used in business all over the world. Okay, wherever you are. Okay, that's context. Happy with that so far?
Yeah.
Okay, so context is important just for background. Right, now we're looking at the golden rules. This is the most important slide that you've seen today so far. Okay, actually I can say it's the most important slide that you'll ever see, because everything that I do in accounting always gets brought back to the basics. Okay, you have to have good basics. But I've got slides on the definition, so we'll show those to you later. But I want to see if you know what these are. Cheryl, do you know what an asset is? What is the definition of an asset?
It's a resource. I know. Okay, wait, like the book definition or my definition of it?
Your definition. What does it mean to you?
Okay, an asset. I can give you examples of an asset, like vehicles, houses, stuff like that. So it basically is.
Yes, basically.
A resource to a business.
Yes. Okay, so what makes an asset? It always comes back to the definition. Okay, so all those things that you mentioned, the vehicle, the house, the computer, the tablet, the phone,
yeah,
whatever. Okay, all of those items are considered assets because they're all resources. They're your resources, so you control them. And those resources can give future benefit because you can use them now
yes,
or you can use them
yes.
later on. All right, so that's the definition of an asset. That's important. Okay, what is the liability? Give me your definition. What do you remember?
I remember it's an obligation.
Yes.
So that's a keyword. I know that's a keyword. Okay, and it's not for future benefits. So usually, so I know it's not like a loan or what's the word I'm looking for?
Okay, you're right. Don't say no future benefit. Say change your wording. Outflow of future benefits.
Okay.
So assets bring in future benefits. Liabilities remove future benefit. Outflow of future benefits. Right, so definition's perfect. Okay, you'll see them on one of the slides. Okay, liabilities, obligation is very important, so I'm glad you remember that. Obligation that creates an outflow of future benefits. Right, capital is capital, money that the owner contributes, but for in 1502, you only looked at one type of capital. Capital was only capital when you covered 1502. But when you look at 1601, you're going to have lots of different types of capital because you have lots of different types of businesses. So for partners, capital is something. Okay. For CCs, capital is something. Okay. For companies, capital is something. But those some things that we'll look at later on are always considered capital. So if you break it down to its basics, it doesn't matter what I call it. Capital is capital. If I can understand what it is, then I know what rule to apply. Right? And that's something that we'll look at when we get to different chapters. We'll break this down further. Okay, this is the difference, okay, in terms of 1601 compared to 1502. In 1502, you didn't break down capital into other things. In 1502, you broke down assets into other things. Land, buildings, vehicles, equipment, inventory, debtors.
Can you please give me an example of capital broken down into something, just so I have an idea?
Okay, sure. Share capital.
So just one.
Which type of business sells shares?
Companies.
Yes. So when we look at companies, you're talking about share capital. When you look at CCs, we're looking at members' contribution.
Okay. And then probably partners capital.
Capital is capital, but now you've got capital for partner A, partner B, partner C, D, E, F, G, etc. Does that make sense?
Okay. Yes.
Yes. Okay, so yeah, good question. So capital is broken up into different things when we look at different types of businesses, but it's all the same thing. Capital is capital. It follows the rule. C for capital, C for credit. Okay, these rules, how did you remember them? Did you just study them, or did you like use something to remember them? Do you know these rules? Do you
know there's two. Yes. Okay, so I know pearls is one. We use literally half it. And I know the other one's deadlick.
Okay, yeah.
So I know those two.
So I'm glad you've got both. Different students use slightly different ways of remembering it. As long as you've got a method, as long as you know the rules. These rules are so important. Okay, you're going to use them when you apply them in different areas. Okay, so the sooner you get comfortable with these rules, the better. Right, so I'm hoping that you've spent a whole semester going through 1502, that by now the rules should be okay and they'll get better as we do more. Yes?
Okay. Yeah.
Feeling okay about the rules?
Yes.
Awesome, good. All right, and then income, how would you define an income? What makes income income?
Money into a business or an inflow. I know there's an inflow of
Yes,
cap.
it's not
No,
quite
no, no. An
money
inflow of.
because it doesn't always have to be in the form of money. You can sell goods on credit. That's going to generate income, but no money.
Yeah. I get what you're saying. So what's the word?
Income is an inflow of benefit or an increase in benefit. That's it.
Benefit. Okay.
Yeah, same with
Okay.
expenses. Okay, expenses decrease in benefits or outflow of benefits.
Outflow. Okay.
Yes, and then drawings, the opposite of capital, taking from the business. Same as before, when we look at drawings for different businesses, it'll be called something different. Because you asked me earlier, I'll just mention it here. Okay, a company will have drawings. If a company has drawings, it's called a dividend.
Okay. Right.
Shares pay out a dividend. Members
Yes.
get a distribution. That's for a CC. All of this you'll see in other notes later on. Okay, so don't stress too much about it now. I'm just mentioning it because you asked the question earlier. And then with partners, it's still called drawings, but drawings for each partner. So drawings A, drawings B, drawings C, drawings D, and so on. Okay.
So would you say that partnership is the most similar to sole proprietor?
In terms of vocabulary, but very different in terms of disclosure.
Okay.
Yeah. All right. The one that's most similar to sole proprietorships is a CC. Okay. When you look at close corporations, you'll see all the examples we do there. You'll say, well, are you sure we're doing 1601? Aren't we doing 1502 because it's so similar?
Okay.
Okay, so when we get to CC disclosure, you'll see when we do CCs, it's almost identical to a sole proprietor. There are very, very few differences. Okay, with companies, it's a bit different because you need to think about tax and you need to also consider dividends and a few other things. Okay, but partnerships are very different. Right, the vocabulary is the same. Right, so capital is capital for a partner, drawings is drawings for a partner. But the way you account for the transactions within the partnership are very different. That's why you've got 3 separate modules on it or 3 separate chapters on it.
Okay.
That's the tricky one. That's the one that you need to be careful of because you need to know which chapter is UNISA testing me on. Is UNISA testing me on a change in ownership? Are they testing me on a liquidation? Or are they testing me on basic disclosure or a theory question? Okay, goodwill, that type of thing. Right, there's a few things to consider. Okay, and that's why with partnerships, I said it earlier, it's the challenging one. That's the difficult one in terms of being able to identify what must I do when. Okay, the others are quite specific because there's only one chapter on CCs, one chapter on companies, and then one chapter on cash flows. Okay, are we okay?
Okay. Yes.
Okay, so earlier we were talking about those characteristics. Here's the list. This actually comes from the textbook, just a summary. Going concern, relevance. Some of these, they might have spoken about them previously.
Yes.
As I said, it's a pity they didn't recommend Volume 1 as a textbook resource, but it's not a train smash. You can probably still get it from other courses. Where's my writing? Oh, here. Here, let me get the pointer. Going concern, does the business or can the business continue operating? Okay, all businesses need to record their financials according to this going concern principle, but you will have a scenario for a partnership where you won't have a going concern. This is the first time where you're actually looking at a business that's going to end, okay, a liquidation. Right, with the liquidation, we're expecting the partnership to close, to end. That's something that you need to perform later on in one of the chapters. Okay, relevance and materiality. Do we need to disclose the information? That you have to worry about. All information that UNISA gives you needs to be disclosed. When you look at questions, all the required has to be disclosed in the accounting information, right? Unless they give you a particular financial statement. So for example, if we're only looking at the statement of financial position and we're not looking at the statement of comprehensive income, then I don't have to look at all the income and expenses. I just need to direct my attention to the specific account or the specific financial statement that I'm looking at. Okay. Faithful representation, is it reliable? Is it honest? Comparability, so different years. Okay, so this year, last year, the year before. Verifiability, we mentioned earlier, which was the audits. All right, that's practical checking. Okay, checking, verifying, ensuring that the accounting records are reliable, they're accurate, we don't have any problems. Okay, timeliness, the point that I've put here in brackets, the financial year. Okay, you should know that a financial year is 12 months long. Can you have transactions that exceed or that were from the previous year that affects the current year? Can you have scenarios like that?
Can you just repeat the question? From the previous year that affects your current year?
Yeah, so can you have transactions from last year that affect this year, or can you have transactions for next year that arose this year? Is that possible?
Yes, you can.
Good.
Yeah.
What do we call them? Do you still remember?
If you're talking about current and non-current.
No, that's different. That's disclosure in terms of
Okay.
long-term and short-term assets.
Okay.
Yeah, that I'll mention on a separate slide. Adjustments, do you remember them?
Yes.
Okay, accrued expense, does that ring a bell?
Yes,
expenses?
yes. Okay,
Stationery on
yes,
hand?
yes.
Okay, happy with that. Do you remember those or some of them?
Yes.
Good. Okay, yeah, so those will come up again, but you won't cover them in 1601. It's covered in 1502. That's why. All right, so I will mention them later on. You'll see. This set of notes is quite long because I've given lots and lots of background and lots of key points, okay, from different sections from 1502 that you need for 1601. Okay, the last point, understandability. We spoke about it earlier. It's a language. You're learning how to speak a language. These are the most important vocabulary words that we need when doing accounting. But I talk about them as being elements. Elements because, remember we spoke about a nature of accounting? Okay, nature, elements, think of earth, wind, fire, those things that are fundamental, that are basic principles, okay? In nature, the same thing applies in accounting. Right, so when I talk about an element, I'm referring to either an asset, a liability, income expense, or capital and drawings. Right, equity is the combination of those two. Okay, you're grouping things together. Equity can also be calculated using this formula that you probably know from last year, hey? Or last semester.
Yes.
Good. Yes. Okay, so owner's equity is the difference between your assets and liabilities. And that's calculated using two of the elements. You can also get your equity by calculating your capital drawings and the profit or loss. That's also possible, right? Because who's entitled to the profits?
The owner or
100%.
partner, whoever. Yeah.
Yes, very good. Okay, and that's why when we looked at that assignment, remember one of those questions was the profit. How much profit are the the partners? Hey, how much profit is the partners going to share?
Yes.
Right. So it doesn't matter what we're looking at. We're still going to have the same elements. Even when you're looking at the profit for the partnership, we're still going to have income. We're still going to have expenses because the difference gives us the profits. Okay. Here's the note about disclosure. All of these you've seen before. Okay, some of them you've looked at in more detail than others. Okay, those are disclosure financial statements that come from FAC 1502. Okay, those two you should know very well. Okay, this one, they
Yeah.
would have spoken about it, but you probably wouldn't have done much disclosure, because when you look at a sole proprietor, there's not a lot of consideration in terms of equity, because it's so simple. It's one account, it's
Yes.
capital. Right, but when you have
Yeah.
other types of businesses, then you need to consider more disclosure, because you're looking at this statement of changes in equity. And then we'll look at it in partnerships. Okay, especially partners have lots and lots of considerations here in the statement of changes in equity. And then the other chapter, the last one, I think it was number 9, if I remember correctly, when we looked at your learning units. This one, yes. Okay, learning unit 9 is the statement of cash flows. There are 4 financial statements. Those are the only 4. And then we just need to adapt, and we need to change the disclosure based on what type of business I've got. If I've got a partnership, then I need to make all of these look correct for a partnership. If it's a company,
Okay.
then all of them need to look correct for a company. If it's a CC, same thing. If it's a sole proprietor, also same thing. You just adapt it. Okay, but you will have these 4 financial statements, right? And then I spoke about
Sorry,
relevance.
Anthony, did you say that there are only 4 different statements, or are there
Financial
only 4
statements.
forms of ownership?
4 statements and, well, 4 main forms of ownership, but remember, there are others, like a non-profit. That was something you covered last term, last
Okay,
semester.
but so then there's only 4 statements.
Yes. Okay, these are the only 4
Okay.
statements, and IFRS talks about it in IAS 1. Okay, you're not going to have to buy any of those IFRS books. Okay, they're huge books.
Okay.
Okay, they're about 1,000 pages each. And if you were going to study a BCom to go like CA routes, then you would need to get that legislation at a 3rd year level. Okay, not 1st year, 2nd year. You
Okay.
don't even look at that. Okay, but those rules come from IFRS, and IAS 1 talks about these 4. Okay, there are only 4 statements. Those are the only 4.
Okay.
Right, so if you had to go download a set of financial statements for a company, a public company, what's your favorite company in South Africa?
I don't think I have one, but we can use any example.
Anyone, just first one that comes to mind.
Company Adidas.
Adidas. Okay, Adidas is actually American.
Yeah.
So, local?
Oh,
A local
okay.
company?
South African.
Sorry, say that again. A local company?
I don't know. A local company. Can we go with a bank,
You can.
like FNB?
Okay, yes. All right, so First Rand. Okay, FNB is part of First Rand. If you
Yes.
go download their financial statements, right, you will see all 4 of these, even for a big public company like First Rand.
Okay.
Which network are you on? MTN, Vodacom, Cell C, Telkom?
Telkom.
Telkom.
Yes.
Okay, Telkom is a public company. Telkom will also have a set of financial statements with the exact same disclosure. 1 statement
Okay.
for comprehensive income, 1 for financial position, 1 for equity, 1 for cash flow. Right, so you won't have more than this. This is it. Right, accountants that are CAs, okay, chartered accountants, they are going to be presenting the information, okay, for their companies according to those 4 financial statements. That's it. Right, so there
Okay.
are only 4. There aren't any more. But you do get other types of businesses. Right, we spoke about the 4 main ones because they're covered in your module. Okay, remember the first one was 1502. The other 3 is 1601.
Okay.
Okay, good. Right, there's the note disclosure in red, and there's the note format. Right, again, I'm going to mention it, the templates. Those templates I had sent you are important for practical questions. Okay, when we do questions, we're going to use templates so we can record the information correctly, and we can calculate totals, we can work out profit, we can work out loss, and other things. Right, this is just a note about the basics. We spoke about them. I'm now going to give you a few slides looking at specific topics. Okay, so practical application, assumed knowledge from last semester. Okay, you did this module. Right, this is the best one in terms of being the most complete and covering the most. Okay, the other ones are easy. 0 and 1 are generally students that didn't do accounting at school. Did you do accounting at school? I actually didn't ask you that question.
No.
Okay, so
I
you're
did
actually
not.
a
That's when
student that studied accounting for the first time in semester 1.
Yes.
That's actually
And that's
ideal.
why I was
Those are the best students to have because those students don't have bad habits from before. Okay.
Oh, okay. I get
Right.
what
So
you're saying.
you're actually in a better scenario because this is how schools should actually teach accounting. Schools should teach accounting based on principles, right? And that's what universities tend to do because universities tend to give you guys scenarios where you actually need to think and you need to apply. In school, it's more like memory, okay? And like it's like parrot fashion learning, which isn't ideal. Okay, ideal would be to practice application, to practice taking these concepts and applying it appropriately. Right, so now you're really impressing me. If you didn't do accounting at school and you got 70% last semester, that's a very good sign. Do you do well in all your subjects, or is it just accounting? Maybe you just got a natural aptitude.
No, I actually do well. I actually am good at maths. So from school,
yes,
it's been maths.
wow,
I'm just
okay.
better at maths.
Yes,
Yeah.
I can see why you
But I
chose
think
to
I'm
do finance then. Yeah, it's mathematical.
Yes, that's why I didn't choose accounting because I was scared of accounting. But my thing with maths is I was actually better at geometry.
Okay, nice. Yeah, geometry is
Paper
a lot of
2.
problem solving. Yeah, like looking and finding the right
Yes.
answer because there isn't
Yes,
one approach.
yes.
It changes. Yeah.
Yeah.
Okay, that's
So
good. It's nice to have some background because at least then I can relate to things that you know. So in future, if I look at a specific scenario, I can say, okay, well, imagine this being a geometry problem, and then I can approach it that way, right? Because I like to break it
yeah.
down so that you can relate to it, especially if you've never done accounting before. It can be quite intimidating at times when you look at certain
Yes.
topics and concepts. Okay, but yeah, you'll be fine. You've got the basics. I'm going to give you as much as I can in the next few set of notes here, just to highlight the importance, important bits and pieces.
Okay.
Because those are the important things that you need to carry through later on when we start going through textbook examples. Okay. Right, so that's what this first week is for. Okay, if you've looked at the rest of the notes in week 1, you'll see it's all background, it's all basics. But we need it because when we look at the first chapter and when we look at the disclosure, you need to present that information appropriately. Right, and that's why we need to go back and we need to look at some of this. Okay. All right, so basics are universal. I spoke about that earlier. It's important to note that it doesn't matter how far you go with your accounting studies, you just need to remember the basics. Keep it simple. Don't overthink it. Break it down to its elements. Those elements are very important. Know your principles. So we've looked at the rules already. Okay, these are things that you spoke about in 1502. They mentioned the double entry rule. Every debit has a credit. Remember that?
Yes.
Okay, that'll always apply. It'll even apply later when we do things like a liquidation. Even in a liquidation, do you have to consider both sides of the transaction? You always have to look at both sides. Adjustments, even bank recon even, you look at both sides. You look at your internal records, you look at the bank's records, and then you check who's right. And then you decide adjust or reconcile. All right, all of those things are relevant, and they all come back to this one rule. Every debit has a credit. There's always two sides to every transaction. Okay, a buyer and a seller. Every transaction has two sides. Okay, buyers and sellers, one side, two sides. Okay, so accountants base their principle. I don't want to go into history, but you can go Google it or you can read it in one of the textbooks. Accounting comes from business. Okay, it comes from a guy called Luca Pacioli. Okay, he's an Italian businessman. He actually created, he's called he is accredited as being the father of accounting, right? And he was a businessman. Okay, so an Italian created the system of debiting one account and crediting another account. Okay, that's where this comes from, and it's just been used continuously, and even today, right? So all the accounting we do today is computer based. It's on a software package. Okay, Pastel, QuickBooks, SAP, it could be whatever. Okay, different accounting packages help accountants process transactions. But if you break it down to the basics, it's a buyer and a seller entering into some sort of a transaction, and you have a debit and a credit. What does the debit represent, Cheryl? What is the definition of a debit?
The left side.
Very good. Okay, and the credits?
That's the right side.
Yes. Okay, it was on this slide. If you didn't see it, there's it there. Right. There is no other definition for it. A debit is the left, a credit is the right. And that's why I'm saying it's good that you haven't done accounting at school, because sometimes students that have studied accounting at school study accounting through memory. And then they think the debit means a plus, or they think the credit means a minus. A debit can be a plus, and a credit can be a plus or a minus, but it's based on the rules. Do you see that?
Yes.
Okay, so a debit for an asset is a plus. A debit for a liability is a minus. Okay, so debits are the left, credits are the right. Every account, it doesn't matter what account, every single account will have a left and a right. And then we need to apply the rule. So when we apply the rule, then we look at the plus and then we look at the minus. Does that make sense?
Yes.
Okay, and that's the approach. Okay, that's how we're going to do accounting, because then I only need to remember this one page. Okay, I need to know what I'm dealing with, and then I need to practice applying it. Okay, and I'll show you that as we go. Okay, when we look at other scenarios. Okay, financial position. What does that entail? How do you measure financial position? What makes up the financial position? Do you know?
Are you asking me like assets and your liabilities and equity?
Yes, brilliant. Good. Okay. Right, so am I going to look at income and expenses here?
No.
No, because I'm focusing on financial position. Position means today. Okay, where are you today? So if we're looking at a company, where is the company today? The company will have assets, a certain amount of them, and the company will have liabilities, a certain amount of them. Okay, financial position is focusing only on assets and liabilities. You can also work out the difference between the two, but then you're looking at equity, and equity is actually separate. Owner's equity is A minus L. It's the difference. It's taking your financial position a step further. If you're in a good position, your assets are greater than your liabilities. Do you agree with that?
Yes.
Good. Right, so how do you measure assets and liabilities? Do you know? Okay, remember recognition? Recognition is the first question. You recognize an asset, you recognize a liability when you're looking at financial position. Now we're looking at the quantifying. Do you know how to measure these things?
Measure as in, are you talking about like non-current and current? Is that where we're at?
Okay, you can bring that into the discussion. That's fine, but that's still part of the first bit, the recognition. Recognition means, do I have a non-current or a current liability or an asset? Okay, what is non-current? Okay. Non-current is long-term or short-term? Which one?
More than long-term.
Yes, more than 12 months. Good. And then current?
Short-term. So less than 12 months.
Less than 12 months, correct. Okay, well done. When we look at the measurement, we're looking at the rands, okay, and the cents. Right, so when I have an asset, how do you measure inventory? How do you measure inventory?
Do you mean like stock take, or like what I purchased
Yes. Now you're bringing in the correct concepts, the ideas. Good. Okay, so you're
Oh,
talking
okay.
about a
Oh,
stock
okay.
take. A stock take would be a way to measure inventory, but for which system?
This
Perpetual,
is where it gets
periodic?
so confused. Periodic.
Yes, correct. Good. All
So
right, so
perpetual is as soon as you sell it, it gets crossed off.
yes. Okay, perpetual. The word perpetual
Okay.
means continuous.
Okay.
Okay, so I'm continuously monitoring stock. I don't need to do a stock take. With periodic, we have to calculate cost of sales, and that uses an equation.
Yes.
That gets discussed later on and it gets used later on. But again, it's not covered in 1601. It's from 1502, but we need it in 1601.
Yes.
Okay, so
Okay.
inventory, if we're just looking at a specific asset, inventory would be measured according to the periodic system or the perpetual system. Does that make sense?
Yes.
All right, so when you
So
look at
how
the
would we,
measurement, sorry, what is
I
that?
guess, so how would we measure an asset?
How would you measure an asset? It depends.
Yes.
All right, what asset am I measuring? That's what I need to ask. Okay, so when
Okay.
we measure an asset, we talk about value. That's the short answer to that question. If you're asking me, how do I measure an asset? I need to work out the asset's value. But now value can be determined using different approaches. I can use perpetual for inventory. I can use periodic for inventory. What about if I look at PPE? What do I use there? Now I use carrying value or I use costs. Do you see the difference?
Yeah.
Okay, what about
Okay.
debtors? Okay, how do I measure the value of debtors? Well, I need to know the outstanding balance, and sometimes I have to create an allowance for bad debts. Or maybe I have to write off bad debts. Do you see the difference?
Yeah.
Okay, how do I measure a liability? Well, there's a loan. How do you measure the loan? Looking at its current value. Do you agree?
Yes.
Okay, or the balance outstanding. I'm just going to write BO, balance outstanding. Right, because a loan will be amortized. A loan will be paid off. Do you agree?
Yes.
Okay, so see, measurement is looking at all of these other things. All right, I'm just getting you to think about it. Okay, this is the first slide, and then you'll see a bit more on assets and liabilities later on. Okay, I'm just
Okay.
getting you to think about how this fits in when we look at disclosure. Okay, if I'm going to be disclosing a loan, I need to look at its current value. I need to look at how I've paid off the loan. I need to look at any interest that might have been added to the loan in order to get the balance of the loan. Does that make sense?
Yes.
Right, so the
Okay.
importance of this question is to appreciate that different assets and different liabilities are measured using different rules. Okay, inventory has a specific rule, PPE has a specific rule, debtors has a rule, loans have a rule, etc. All of these different things have certain rules, and then we need to apply it in different scenarios. Okay, is that all right?
Yes.
Great. So now, can you answer this question? When do we actually measure assets and liabilities? Any idea? When would you measure an asset? When would you measure a liability?
When you need to sell it,
It could be,
can I
that's
say that?
one scenario. Correct. I
Yeah.
agree with you completely. If you have to sell an asset, that's an asset disposal, then you need to work it out. So
Yes.
what are we looking at? We're looking at one point in time.
Okay.
Okay, we're not looking at over time. Over time is different. That's the next one. Okay, let me
So,
get there
so
first.
over time, or a period would be your statement of comprehensive income.
Well
Is that
done.
what
Very
you?
good.
Okay.
Yes. And that's looking
Okay.
at financial performance because performance is
Yes.
measured over a period of
For a
time.
period of time. Okay. I
Okay,
get what you're
assets
saying.
and liabilities are measured at a point in time because remember, if you've got a vehicle,
Yes.
okay, the vehicle's value on the 1st of January is different to the 1st of August. Does that make sense?
Yes.
Okay,
Yes.
and that's why we need to look at it at a point in time. That's why when I do assets and liability calculations, when I do property, plant, and equipment, I draw timelines because you need to know where you are. That's why I had timelines in my answer when we did the assignments because you have to know where you are in terms of time. Same with the loan. Okay, was the loan balance of that 50,000? Was it at the end of the year? Was it at the beginning of the year? Where was it? Remember that?
It was at the end of the year.
Yeah,
Yes.
we had to look at those things. Remember that. See?
Yes.
Okay, so this is important. Assets, liabilities at one point in time, at a particular date. 1 January is very different to 1 August.
Yes.
Okay. Right, here's a note about the accounting equation that you know. This is important. This I want to spend 1 or 2 minutes discussing. The owner's equity. Okay, when you did an accounting equation, you had columns, and then you had to show the effects of a transaction in the column for assets, owner's equity, liabilities. Right, that was last semester's content. Right, what we need to remember here for this semester is owner's equity comprises of 4 elements. Right, remember how many rules did we have? We had 6. There's the 6 rules. Okay?
Yep.
Those 2 deal with financial position. We just spoke about them.
Yes.
Okay? Those other ones look at profitability. Okay, so profit or loss and equity.
I just have a question, but sometimes your financial position does consist of your equity.
Yes, because the financial position is summarized. Okay, it doesn't have its so remember the statement of changes in equity. This statement looks at all the detail.
Okay.
Okay, in your statement of financial position, you'll have assets. Okay, you'll have non-current, current, and then you'll have a total.
Yes.
And then you'll have equity and liabilities at the bottom.
Yes.
Okay, equity here is summarized. The detail is in that statement.
Okay.
So you do have
I get what you're saying.
Summarized. It's not detailed.
Okay.
The liabilities are detailed because you'll have non-current and you'll have current.
Yes.
Okay, but yeah, you're 100% correct. Yes. So if you're remembering that, that's good. Okay, you are going to see the equity in the statement of financial position, but it's not the focus. The focus is in this statement.
All right, I get what you're saying.
Awesome, good. Okay, nice questions. All right, so just coming back to this, I've highlighted the A and the L. Okay, those 2 are covered in the statement of financial position because if we rearrange, the owner's equity can be calculated using the difference between your assets and liabilities.
Yes.
Right, so let's have a look at this individual. If this individual has 5 million in assets, but 6 million in liabilities, good or bad position?
Bad.
Why?
Because you have more liabilities.
Very good. You actually have negative owner's equity. Do you see that?
Yes.
Okay, so this individual would be in a bad financial position because they don't have any owner's equity.
Yes.
If you look at a different individual, let's say this individual has 5 million in assets and 1 million in liabilities. Good or bad position?
Good.
Yes, because now you actually have some owner's equity. You have some worth. Right, this individual, net worth 4 million. This individual, net worth minus -1 million. Do you see the difference?
Yes. Yes.
Okay, so financial position is looking at good or bad at a point in time. That's important. Right, so when you look at financial position, and it doesn't matter what type of business, CC, company, partnership, it doesn't matter. Okay, when we look at partnerships, we're going to do the same thing. We're going to look at the partnership's assets, we're going to look at the partnership's liabilities, and we're going to see how much equity do the partners actually have. All right, that's where we're going later on when we get to the textbook content. Okay. Is this concept okay?
Yes.
Good.
Yes.
All right, so just remember owner's equity can be calculated using assets and liabilities, but also using the income, the capital, the expenses, and the drawings. Okay. Owner's equity, if you had to draw an equation for that, you could say owner's equity can also equal the capital plus the profit or minus the loss. Okay, so plus or minus loss, okay, minus drawings. Right, that might even have been an equation in your textbook last semester. Right, because owner's equity can be calculated using 2 different perspectives. I can either look at the owner's equity on its own, which is the statement of changes in equity, Okay, or I can look at the summary and I can look at the difference between assets and liabilities. Okay, two different workings for the same thing.
Okay.
Maybe you can even remember incomplete records from last semester as one of your
Yes.
sections.
Yes. Yes.
Okay, when you looked at incomplete records, you had to use this. You had to look at owner's equity because owner's equity can help you find something that you don't know. Because
Yes.
we know it can be calculated using two things. I can use this or I can use that, and the two have to be the same.
Yes.
Okay,
Yes.
great. Right, those are the definitions. I asked them earlier. Okay, they're on the screen. Okay, you don't have to go and look at IFRS. There's the full definition for an asset, and there's the full definition for a liability. Both are important for this, the financial position. Okay, what you can add here on this slide is current versus non-current. That you can also add here. Just to remember that when you have assets, you have long-term assets and you have short-term assets. Same for liability. You have long-term liabilities and you have short-term liabilities. Okay, that you'll probably remember from last year.
Yes.
Perfect. Right, there's the notes. Can you give me examples? Give me some examples of non-current assets.
A vehicle.
Good. What else?
Buildings.
Yes.
Um,
Give me one more.
ooh, one more. My.
Popular one. Equipment.
Yes. Okay.
Okay.
Equipment.
Give me some current assets. Ones that you know.
Bank.
Yes.
And I say petty cash.
Yes.
Debtors.
Yes.
Well, debtors depend, but debtors, yeah.
One more. Another popular one. We spoke about it earlier. You asked me a question about it.
Inventory.
Yes. Very good.
Okay.
Okay. There could be others. So you could add to current assets. You could add prepaid expenses. Accrued income. Okay. Those are also current assets. Those are receivables, trade and other receivables. Okay, non-current liabilities. Give me a few.
Long-term loan.
Yes, good.
Mortgage. I think those are the two popular ones.
100%. Yeah, mortgage and long-term loans are perfect. Bonds even perhaps.
Yeah.
Okay, a mortgage or a bond, same type of context, home loan, that type of thing. Current liability.
Mainly, I think it's trade payables.
Yes,
So your creditors.
Okay, good. Well done. Creditors. What's the opposite of this one?
Bank overdraft.
Very good. Yes, nice. You know it. Okay, there's the note about the equation. You've got it on screen. Assets can be bought using equity or debt. Right, this is more financial management. Okay, but it's here as an accounting equation. A equals O plus L. Right, you can also rearrange and OE equals A minus L. What's the missing one?
Could you just repeat what you said? Equity or debtors?
Debt. Sorry, the writing here. Okay, debt. Equity or debt.
So,
Liabilities is debt.
Oh, okay. I get what you're saying.
Liability
Okay.
is debt. Debt is the bad word for credits. Okay, remember credit and debt?
Yes.
Okay, I'm not talking about credit as the right-hand side. That's debit and credit. That's different.
Okay.
Okay, debit is the left, credit is the right. Here,
yes.
I'm using credit as a form of financing. Taking out credit, having a credit card, having a credit facility. Okay, that credit refers to debt.
Yes.
That credit, that debt is a liability. That's what I'm referring to.
Okay.
Okay, so financing, assets can be bought using debt or equity because of this equation.
Right. Okay.
Right, so think about the assets that you have. Okay, the home that you're staying in.
Yes.
Like your parents or yourself or you would have either have taken out a loan to buy it or you would have saved up for it.
Yes.
Or think of the car or the laptop, the tablet, the equipment, all of that, the furniture. Okay, how did you buy the furniture? Either through debt or equity. You either saved up for it or you paid it off over time.
Okay, I get what you're saying.
Yeah. Okay, so that's a financing concept. In accounting, we're just using those equations to help us if we need it. Right, so you can make this the subject. If I make L the subject, what would L be equal to? Let's check your maths.
If you make OE minus A.
Are you sure? Is that your final answer?
Or is it the other way? Oh, A minus OE. Sorry.
Yes, that's the right one.
Yeah.
Okay, so take this to that side, take this to that side.
Yeah, and then OE there. Right.
Okay, good. All right, and then we've got some notes here about the double entry. When I look at transactions, I am always going to talk about these steps, the analysis. Okay, I don't mind how you do it. Okay, I'm just looking at content that I've covered before. What I can do, if you want to know a little bit more about the analysis, I'll see what separate resources I have available that I can specifically show you the analysis. Okay, when I look at the analysis, you see you get the debit and the credit. Do I have some slides about that? No, not yet. Okay, but there are steps. Let me write down the steps here. Okay, step 1, accounts. Step 2, elements. Okay, step 3, effects. And step 4, debit or credit. That's all. All right, so when you look at the analysis, you're going to follow these 4 steps. Right, these 4 steps get you the debit and the credit. Okay, so I'm not asking you to study different transactions. I'm asking you to apply the steps. All right, so if I do one example with you, okay, if the transaction is this, credit sale, right, this is the transaction. Okay, I'm keeping it simple. I'm keeping it short and sweet, so at least we can get through it quickly. Right, if the transaction is a credit sale, what am I going to do? I'm going to look at the word credit sale and I'm going to pull out keywords. I want the account. The account is the keyword. Okay, it's the actual account that you're going to record in your accounting records.
Okay,
right,
so debtor.
When I have a credit sale, what do I have? Okay. What is the keyword?
Debtor or is
Okay. What is debtors? Debtors is a
asset.
Okay, what is happening to my debtors when I sell goods on credit? Does it increase or decrease?
Increase.
Good. Okay, then I go to this slide. Where do assets increase?
On the debit side.
On the debit side. See, that's how I take, that's my approach to accounting, because then you don't have to study a list of things. You just have to study 4 steps and 6 rules. Okay, this gives me the debit. So now, what would you write if it was a general journal? Well, if it was a general journal, you would write debit, debtors. Okay, the next part. What else stands out? Well, look at the question. Okay, if the transaction is saying credit sales, the sales is the important bit, right? So now we identify that as the account. There, that's step number 1. Step number 2, what element is sales? Do you know what sales is?
Income.
Good. Sales is income. What's happening to the sales account? What is the effect? Is it increasing or decreasing if I'm selling?
It's increasing.
It's increasing. Good. Okay, see, then you use that and then you go to your rule. What does the rule say? Where does income increase?
Credit.
On this side. That's how you get the debits and credits. You don't have to study a whole list of different transactions. You just need to know how to apply it. Okay, and there you go. Now you've got it. See, those are workings. These are workings that I talk about when you look at analysis. But I don't mind how you do it. That's just my approach. Right? If I helped you with 1502, I would have taken you through that. But I'm confident that you are okay getting this. Okay, I know you're okay with that. You should be able to get debit, debtors, credit sales, right? If you have credit sales as a transaction. Is that all right? Are you okay with that?
Yes. Yes.
Awesome. Okay, I don't mind how you get it, as long as you can get it. Whether you used the workings or whether you didn't, it doesn't matter, as long as you're getting there. Okay, and that's what we're going to need when we do different questions. Lots of different questions. This is very important when we do a cash flow question, because in cash flow you need T accounts, lots and lots of T accounts. We're going to do lots and lots of analysis. You'll do some of it in the disclosure, but not as much. Okay, a lot of it will come up later when we do the cash flow. Okay, are you right with that? Transaction analysis, happy?
Yes.
Okay, well, I'm going to delete that, so I don't want to keep it on my slide here. It wasn't meant to be here, so I'm going to get rid of it. Okay, what I'll do is I'll paste it here. I'll just put it there in the notes. Okay. All right, so yeah. Okay, let's go back. We were here. Yeah, this is the right page. Perfect. Okay, disclosure. Okay, I've put references here, but this is obviously for the textbook. The page number might have changed depending on what publication you've got. Okay, I've got an older textbook version. I don't have the 2020 because remember, depending on the volume, okay, you get different volumes of the textbook, and then they always publish and update the textbook. So you might have a different textbook, so the page number might be different, but I'm just referring to format here, that's all. Okay, remember earlier you asked me the question about equity. Don't you see equity in the statement of financial position? You do.
Yes.
Where do you see it? You see it as a summary, as a separate heading in the statement of financial position. Right, when we look at practical questions, I'm going to walk you through the actual disclosure. We'll disclose it. We'll draw up the assets, the liabilities, the equity. Right, why is this slide here? It's because in 1601, in all your tests and exam questions, you are going to have to disclose the information correctly. And that's why format is so important for this module.
Okay.
Okay, so you need to know what all these different statements look like in terms of their formats. Right, even when we get to a cash flow statement, the cash flow statement will have its own formats. I don't know if I attached that to the... I'm just thinking about it now. Let me just have a look at my folder here. I think I didn't send you the cash flow statement. I might have or might not have. Let me just quickly look at my email that I sent you. Was there a cash flow statement in that email? Let me just check here quickly. I think I might still have to send you that template. I sent you templates for the financial statements because we're going to be using those soon. I've got a statement for... Yeah, I did send it. It actually is there. It is attached. Okay, you've got all this. You've got all the templates. You've got the balance sheet. Okay, here's it here. Okay, there. Balance sheet, template balance sheet, template statement of change in equity, template income statement, template cash flow. Okay, you've got this. Okay, I emailed it to you. It was attached to your email. Okay, that you can print out, that you can use later on. But those templates are important because we're going to use them when we do disclosure. Right, so I'm just showing you this because this is explaining how important it is to understand what these things look like. Right, are you happy with that?
Yes.
Perfect. Okay, financial performance, you gave me the answer earlier. I'm going to write down what you said. Financial performance, income minus expenses. You said this was over a period of time.
Yeah.
12 months. Right, so when you look at your sales, you don't look at the sales on one day. You look at the sales over the year. Does that make sense?
Yes.
Perfect. How do you measure your income and how do you measure your expenses?
Why do I struggle with this? It's just the measure. So okay, so for income, would it be like sales minus cost of sales?
That's profit.
Or am I?
Okay,
Yeah.
you've given me a calculation for profits. Sales minus cost of sales is gross profits. Okay, that's good because now you're measuring performance. That's brilliant. That's good. Okay, that's one measure of profit. Gross profit, sales minus cost of sales. I
But
agree.
how would I measure my income? Would it
Yes.
just be
How do you
sales?
measure the income and how do you measure the expense? So how do you measure the sales? And then if I had something like water and electricity, water and lights, okay, how would I measure that? That's what I'm asking here.
With how much you use? How would I measure my water and electricity?
Yes. How do accountants measure that? So we know the municipality will bill you according to your consumption.
Yeah.
But how do accountants measure sales and water and electricity? But in general, how do accountants measure income and expenses? I know you know. You just don't. You're not getting the word. Think about it.
Yeah.
Sales. How would you measure a sale? Let's look at that. That's the
How
number.
much you sell? It's like how much you would sell.
But measure means quantifying it. So here's the example. Remember we spoke about a credit sale?
And cash sale.
Okay, yeah, credit or cash, it doesn't matter. But let's just look at credit. If
Okay.
I have a credit sale, will I measure it?
Yes.
How will I measure it? Will I measure it based on how much money I received?
No.
How do I measure it?
With how much you sold. With how much you sold. You still sold it.
Yes, you did. So what system is that?
Oh, okay. You're talking about accrual and prepaid.
Cash basis.
Or prepaid.
Okay.
I'm not understanding this at all.
You don't understand this. Okay, I'll explain it to you. Right, so in accounting, if you're looking at the measurement of a income or an expense, you either use an accrual basis or a cash basis. It's not an adjustment. Forget about accrual income and accrual expenses. That's not what I'm looking at here.
Okay.
Okay, so an accrual basis or a cash basis looks at the principle in which you are measuring something. Right, so the example is, okay, you are going to sell something to me.
Yes.
Okay, if it's a cash sale, when do you measure that sale? Do you measure it the moment you sell me that item or do you measure it later on?
The moment I sold it.
Correct. Okay, that's a cash basis of measuring your sales because I'm going to quantify the sale the moment I made the sale. Do you see the difference? Okay, but now what happens if it's a credit sale? Okay, so today is, what is today's date? It's the 18th. Let's assume you sell something to me on the 18th of August, and I'm going to pay you on the 18th of September, 30 days later, or 31 days later, a month later. Okay, when do you record the sale? When do you measure the sale?
I'd still measure it now.
Why? Because you're using an accrual principle. Okay. Accrual basis. All right, so the answer to this question, okay, income is measured when it is earned, not when it's received.
Okay.
Expenses are measured when they are incurred.
Okay.
Right, so water and electricity. I will measure my water and electricity when I incur that expense. So if I've used the water and electricity, I will have a water and electricity expense. Does that make sense?
Okay.
Okay, so earned and incurred is how you measure income and expenses because it's not based on receipts and payments. It's not a cash basis.
Okay.
It's an accrual basis. They talk about this as being an accrual principle. That's the difference. So accountants measure performance based on the accrual principle, based on the income that you've earned and the expenses that you've incurred.
Okay.
And that is what we look at over time. All right, so over the 12 months, maybe I've paid for 11 months of water and electricity. Okay, 1 month is outstanding. Okay, so if it's outstanding for 1 month, what do you have? You have an accrual. you have an accrued expense. Do you agree?
Yes.
Okay, so how much am I going to show for the financial performance? In that 12 months, I'm going to show 12
The whole
months
12
of
months.
water and electricity. I'm not going to show 11 months, even though I only paid for 11 months.
Yes. But you still
Okay.
use the other 1 month, so you'll show it all.
Correct. That's why you measure things according to the accrual principle. Whether you paid it or not is irrelevant.
Okay.
Okay, I incurred the expense, I need to record it. Does that make sense?
Yes.
Right, there's the answer. How do we measure it? Income is measured when it's earned. Expenses are measured when it's incurred. That's how
What would the
accountants measure performance.
So what would the correct answer be for assets and liability?
Assets and liabilities, how do we measure it? Well,
Yeah.
that's based on your point in time. That's why we said you need to measure it either based on periodic or perpetual, or you have to base it on diminishing balance or straight line. There it's based on a system. It's based on the rules. Yeah. So if it's inventory, remember there wasn't one answer for that question when we looked at assets and liabilities.
Yes.
There were multiple answers because you had to be specific. You had to tell me what asset are you measuring. If you're telling me you're measuring inventory, then I'm going to say you're either going to measure it according to perpetual or you're going to measure it according to periodic.
Okay, so for here there is just one answer.
Yes, because income and expenses are simple. It's either you've earned it or you haven't, or you've incurred it or you haven't.
Okay.
The receipt and the payment is looking at cash flow. That's different.
Okay,
yeah, so for this one, you've got one answer. Income earned, expenses incurred, and it's based on the accrual principle. Happy?
Yes.
Awesome, good. All right, there's the definition. They come from IFRS. We spoke about them earlier. You've got them. Can you give me a few more examples of income besides sales?
Rental income.
Good. What else? Give me a few more.
Sales.
As many as you can think of.
Interest?
Yes, interest income. Okay, what about discounts received? Can you receive a discount?
Yes.
Good. Okay, give me some expenses. We had one. Besides
There's so many.
give me others.
Rent.
Good. Rent expense.
Salaries.
Okay, rent paid. Yeah, be more specific.
Yes.
Because rent can be income or an expense.
Yes.
Good.
Okay,
salaries,
so
I agree. Give me a few more.
Wouldn't stationery be an expense as well? Yes.
It definitely will be, yes. Stationery is definitely an expense. Good. One more.
Telephone.
Very good. Yes. Telephone, advertising, repairs, maintenance. Okay, there's lots of different expenses. Okay, good.
Yeah.
Nice. Where are we going to show them? Here. Right,
yes.
So the reason why I've got that slide with this one is because we're looking at performance. It's over time, so you have to show the 12 months. Okay, how do you show this? It's done in this format. Okay, you've got sales, you've got cost of sales, then you have totals. Other income, other expenses with other totals. And then you've got the profit and loss for the period. This is a very basic disclosure for the statement of comprehensive income, but I'm just getting you to think about this. Profit and loss. How do you measure it? It's income and expenses. That's all.
Yes.
You won't see any assets and liabilities here. You'll never see them here. Okay. When you're looking at this disclosure statement, you're only going to be thinking about income that I've earned and expenses that I've incurred. That's it. Forget about anything else. And that's exam technique. Okay, when we get to past papers, you'll see, I'll show you exactly how to approach a question. I will give you the exam technique because I'll do the past papers for you and you can see how to go about answering a question. Okay, you need to focus on what is the question asking me to do. If the question's asking me for this, I'm only going to look at that. Okay, and you'll get better at that. You'll see. I'll give you all the tips and tricks and how to do well in the tests and exams. Okay. All right, then we've got another note here. Also looking at financial performance, but be careful. Okay, it also links to this, the owner's equity. Right, because who did we say gets the profits?
The owner or the
Very good.
partner or, yeah.
There's the answer. Okay, owners are entitled to the profits and they need to cover the losses of a particular business. Right, so we need to also bring in the capital and the drawings here. Okay, giving to the business or taking from the business. And there's the formula
Okay.
from 1502. Okay, there's the other equation. Capital plus or minus profit or loss minus the drawing. That's another formula for calculating owner's equity. Okay, happy with the slide?
Yes.
Good. Okay, it's just revision. A lot of this we've looked at already. There's the other note about it. Okay, financial position, financial performance. What is what? Well, financial position, those two.
Yeah.
Okay, financial performance, those four. Okay, and there are only 6 rules in accounting. These are the only 6. CAs use the same rules, and that's at the top of the profession, okay, in terms of accounting. All right, does it make sense?
Yes.
Awesome. Okay, this you should know. A general ledger has a debit side and a credit side.
Yes.
Okay, when you're looking at a general ledger, you have to reference other accounts. So if this account is bank, you don't write
Yes.
bank in bank.
Yes.
Okay, or if this account is debtors, you don't write debtors in debtors, right? Okay, you reference the contra account. The contra account would be what you're referencing. So if I'm looking specifically at, let's use debtors because we spoke about a sale earlier. Okay, if this account is debtors, what will I see in this account? I'll see sales. I'll see the contra account. The contra account will be on the debit side because sales will increase my debtors because it's an asset. Debit plus, credit minus. Is that all right?
Yes.
Okay. I will show you lots of T accounts when we need them. Okay, we don't need them now. Okay, when we look at cash flow, we'll need them. When we look at workings in certain disclosure questions, we might need them. Okay, it all depends. But I just need you to recap and remember what this is. Okay, a general ledger account is a T account and a very useful working.
Yes.
It's a working because I can calculate something and I can use it to answer a particular question. Okay, happy with that slide?
Yes.
Awesome. All right, here's something for you to do as a test your knowledge. Okay, what balances will land and buildings have?
Debit.
Good. What balance will sales have?
Credit.
Good. Bank overdraft?
Credit.
Good. Stationery?
Credit.
Ooh, what is stationery?
An expense. Okay, debit. Sorry.
Yes. Okay,
Expense.
remember, you need to always break it down to its elements. Okay.
Okay.
This is an asset, this is an income, this is a liability. That's why we have a debit, credit, credits.
Okay.
Okay, so stationery is an expense. Why? It's because stationery has a debit. Why? It's because it's an expense. Do you see? The approach might be different to what you've used before. Okay, my approach is to take it back to its basics because I cannot change the 6 rules. I've got assets, liabilities, income, expenses, capital, and drawings. I just need to know which rule am I dealing with.
Okay.
Okay, what is
Okay,
low?
so the liability,
Good.
credit.
So what will it have as a balance?
Credit.
Good. Okay, debtor, what is it? Give me the element
Asset.
and then give me the answer.
Okay, so asset, debit.
Good. Vehicles.
Asset, debit.
Good. Creditor.
Liability, credit.
Good. Interest income.
And then income, credit.
Perfect. Well done. Good. Okay. This is just a little test or quiz just so that I know that you know your rules. And then when we look at other things, we can apply it. Okay. Here's a note about your adjustments. How long is the financial year?
12 months.
Good. Okay. Do all transactions always relate to the year?
No.
No. Good. So why do we process adjustments? It's to make sure that everything is accurately reflecting the year's transactions. So the start of the year and then the end. Okay, when you process an adjustment, you're providing for the 12 months. You're making sure that you have the full year's worth of transactions and they are accurate. Right, so if you haven't paid for the last month, an accrued expense, can you only show 11 months worth of worth of an expense? No. You've got to show the 1 month as well because it must accurately show the full 12 months. Does that make sense?
Yes.
Okay, good. Right, so let's see how good you are with your adjustments. Here's some revision. Here's a slide. The reason why I've put so many notes on these is because I see them so often. Okay, and that's why you've got more notes on this and less notes on other things. Okay, there's no journals here. There's no accounting equation here because you don't need it for 1601. Okay, this you do need, and that's why you've got notes on it. Okay, so can you tell me what is the effect on my elements? In other words, when I have a prepaid expense, and the definition is here, an expense paid which relates to future periods. Okay? Yes. I debit my prepaid expenses, I credit my expense. Right, this you might have studied. Okay, because you can learn accounting through study, but that's not the best approach because that's parrot fashion learning. Then you need a very good memory and you always need to restudy it. Okay, I want you to take it to another level and I want you to understand the understanding. If you can understand what a prepaid expense is, then you're never going to have to study it. Okay, so this is the approach that I want to try to give you using these slides. Right, so do you know what the effect is going to be? What does a prepaid expense do to your accounts? What is the effect? Well, let me ask you this. Do you know what the element is?
I would say an asset.
Good. Why?
Because it's kind of like a debtor because somebody else owes you.
Very good. Yes, your understanding is correct. Remember that keyword resource?
Yes.
Okay, if I have been paid, sorry, not I, if I have paid someone in advance, okay, that's prepaid. Okay, there's a resource. I am owed a particular product or service because I've prepaid it. Does that make sense?
Yes.
Right, so do you have an asset? Yes, you have a resource. You control that product or service.
Okay. Yes.
So now that you know it's an asset, okay, are you creating this asset? Yes. So what do you want? You want a plus. Do you agree? The effect is an increase. Does that make sense? You had zero prepaid expenses. Now you're going to have a prepaid expense. Does that make sense? Let's say 100. Okay, you had nothing. Now you're creating it. Does that make sense?
Yes.
Okay, so can you see why there's a plus here? We're creating the asset. So what, or let me ask you this. Where is the plus for an asset?
Debit.
There we go. See it? That's why you debit the prepaid expense. It's because it's an asset. So then why do you credit the expense? Explain why. Why would you credit the expense? Okay, here's the 12 months. All right? We've got an extra 6 months prepaid. We've prepaid the rent. Is this an expense? Is this an expense? The 6 months?
No.
No, it's an asset. We just spoke about that.
Yeah. Yeah.
Okay, so when do you record the transaction? So let's say I paid that on the 1st of January. Okay, I paid for 18 months. What are you going to record on the 1st of January? You're going to record debit rent expense. Do you agree? And you're going to credit back.
Yes.
Do you agree?
Yes.
Are you going to only show 12 months or are you going to show 18 months? When you pay.
When I pay.
You're going to show the 18 months, right? Let's just say it's 18,000.
Okay.
Keep the number simple. All right. So on the 1st of January, when do transactions get recorded? The moment they take place. Do you agree?
Yes.
Okay, so on the 1st of January, if I've been invoiced 18,000 and I've paid 18,000, do I record that? Yes. Do I record that in my records? Yes. Will I have a debit for my rent expense? Yes. What is wrong with this? Is this too high or too low?
It's too high.
Correct, because how long is the financial year?
12 months.
Good. So can I show 18 months of rent worth of payments
No.
in a 12-month year?
No.
So what
So
do I
you'd make
do?
it 12,000
I
for,
reduce it.
yes, for rent
Good.
expense, and then the 6,000 would go to prepaid.
Yes. Well done. Okay. Do you see why? Do you see why you're crediting?
Oh,
You're reducing the
okay.
expense.
Okay. All
Okay.
right.
Right. So you're not showing the full 18, you're only showing the 12 because 6 is prepaid.
Yes.
Very good. Does that make sense?
Yes.
All right. So
It does. It
if
actually
you can
does. Yes.
interpret this, if you can understand what's happening, okay, then you'll know how to account for it. All right. If you didn't do it that way, then just study the debit and the credit. Debit the prepaid, credit the expense. Either or
No,
will
but I
work
think I prefer
as long as you can code
understanding
it
it.
correctly. Understanding is much better. So if you prefer this
Yes,
method, then you just need to
I
practice
do.
it, and we'll practice a lot
Yes.
when we do different examples. Yeah.
Okay.
Okay. Awesome. Happy with that one.
Yes.
Good. Tell me about this one. What is this account representing?
So, like, what is an accrued expense? It's a liability.
Yes. Why is it a liability? Because it's something I haven't paid.
Yes.
There's an obligation to pay.
Yes.
Make sense?
Yes.
Good. So if you're creating a liability, you had 0 accrued expenses, now you have 60. Okay, you have outstanding payments. Am I going to create it? Yes. Am I going to increase it? Yes. Where do liabilities increase?
Credit.
Yes, that's why you have a liability. All right, why do you debit the expense? It's because it's understated. You have to increase it. Right, so here's the diagram. Okay, here's the start. There's the end. Okay, we've got 12 months. Right, it's water and electricity. I've only got the bill for 11 months. Can I ignore the last month?
No.
No. You have to show 12 months worth of expenses in a 12-month financial year. So you have to increase the expense because it's understated. And that's why you create a liability, because it hasn't been paid, it will be paid. It's an accrual.
Okay.
Okay. Happy with this one?
Yes.
Okay. Right. You might have to write this in on your slides if you are going to print them out. Okay, what I would suggest you do is print out those slides that I've given you, and then you can follow with me, because a lot of the time, for example, your slide will look like that.
Yes.
Yeah, you'll have to add it.
Yeah.
Okay, yeah. So just make some notes if you got it, but you can always go back and you can look at it again if you need to. But make some notes if you haven't printed it yet. But if you can, try print it. At least then you can follow with me, just so we can cover the theory, the contents.
Okay.
Right, awesome. Happy with that one?
Yes.
Perfect. Let's see if you remember this one. Tell me about this one. What is a consumable inventory adjustment? I.e., okay, notice I'm using inverted commas, an expense asset. In other words, I haven't used all of the expense. I haven't used it up. Okay, remember, an expense is an outflow of benefit. If the benefit hasn't outflown, okay, I haven't got an expense. Do you agree?
Yes.
All right, so what happens if I haven't used up the expense? What do I create?
An asset.
Very good. You're creating the asset, so what balance does an asset have?
Debit.
Good. Okay, that's the asset on hand. Okay, they normally call it stationery on hand, or consumable
Yes.
stores on hand, or packing material on hand, something on hand. Does that make sense?
Yes.
Good. Okay, why do we credit the stationery? Here's the understanding. Right, if you have the understanding, you don't need to study it. Right, the
Yes, because you
understanding
didn't
is
use it.
I haven't used all of it, so I need to reduce it.
Yes.
Reducing the expense means I have to credit the expense because I know my rule says an expense
Expense
account
increase.
has a plus on this side and a minus on that side.
Yes.
I am reducing my expense because I haven't used all of it. I can't show the full amount if I haven't used it all. Happy?
Yes.
Good. Okay, do you remember this one? Tell me about income received in advance. What is it?
Income received in advance. So not a liability.
Yes, it is. Very good. Well done. Okay, why? It's because the business has received income and they haven't earned it. Notice the words I'm using here. It's not yet earned. It cannot be income if it hasn't been earned. Income is recorded when it's earned.
Yes.
So if it's not yet earned, it's a liability. Make sense?
Okay. Yes.
Good.
The way I see it is that we owe them.
Yes, you do. You do owe them. You either owe them a refund or you owe them a product or service. Correct.
Service.
You can also look at it in that sense. Yes. That's perfect. Okay. What balance does the liability have?
Credit.
Good. So you credit the income received in advance. Why are you debiting the income? It's because it's overstated. You can't show income if you haven't earned it yet. Because remember, income has a very specific definition. Increase in benefit. The benefit is only increased when I've earned the income. Does that make sense?
It does, but can you give me an example?
Can I give you an example? Sure. All right, so. Okay, we are, let's think of what are we selling? Let's say we have sold, here's an example. We're Telkom. You said you're on Telkom.
Yes.
Okay. You are going to pay for a 24-month contract upfront. Okay, instead of having a debit order every month, you're going to say times by 2 times by whatever the contract is. I'm just going to use 500 just to keep the numbers simple so I can work it out easily. Okay. 12 times 5 is 6,000 times 2, 12,000. Okay, so it's 6,000 for this year and 6,000 for that year. Okay, assuming you're paying 500 a month. Does that make sense?
Yes.
Okay, if Telkom receives the payment in January, is Telkom going to record that as a sale? Yes, they will. They will debit the bank. They'll credit the sales.
Yes.
Do you see that?
Yes.
Okay, when does that take place? That takes place the moment the sale takes, or the moment they receive the money, the moment that you pay them.
Yes.
Right, so 1st of January, Telkom is going to record debit bank credit sales. But when Telkom gets to the year end, when Telkom is going to report on the previous 12 months, is Telkom going to adjust this? Yes. Telkom is going to say we received too much income because a portion of the income that we've received in advance relates to the next financial year, not the current year. Right, so at year end, they are going to process an adjustment. They are going to debit income with 6,000 and they're going to credit income received in advance with 6,000 because they need to show their users that for this financial year, I have only received 6,000. The other 6,000 is a liability because I'm going to only earn that next year when I offer the telecommunication services.
Okay.
All right. Does that make sense? Do you see it now?
Yes, I can see
Okay,
it.
so just remember, businesses are reporting for a 12-month period. Let me ask you this question. When do adjustments get done? At the beginning of the year, during the year, or at the end of the year?
At the end.
Very good. At the end of the year. Only at
Yeah.
the end of the year. You never do adjustments during the year because you need the full 12 months.
Yes.
You need month 1 to 12 before I can adjust. Okay.
Yes.
Got that.
Yes.
Happy. Cheryl, you still okay?
Yes. Yes. Can you hear
Okay.
me? Yes.
Okay, I didn't hear. All right, great.
Oh,
Right.
okay.
Let me just see how much more I have to cover. I might have to cover the next. I might have to cover the rest next week. Let me just
Okay.
see. Maybe let's cover the last adjustment. Okay, yeah. Let's cover the last adjustment. I'll start next week on slide 38. Okay, we've just got a few other slides, just some considerations in terms of revision. Revision from FAC 1502. Okay, it's actually better I cover it next week because then when we go through practical examples, okay, when I have debtors, when I adjust for allowances, when I adjust for depreciation, when I have an asset disposal, what else do I have here? When I have closing transfers, working out profit and loss. All right, then I can explain it next week and then I can look at some practical examples from the textbook. All right, so I'll just end off this week with the last 2 slides just so we don't go too over because I still have some other part-time lessons tonight, so I need to prepare for them. So I just want to wrap up with our session with the last few adjustments. Okay, let's just go through them. Okay, which one did I end with here? Okay, accrued income. Tell me what this is. I said in a note here, similar to debtors.
Yeah. So basically, we provided the service or the sale, but we didn't get paid yet.
Well done. Correct. Okay, notice the terminology, the vocabulary, the words that I've used here.
Yeah.
Income earned, but not yet received. Okay,
Okay.
so what is this going to be viewed as?
A debtor.
An asset.
Oh, income. An asset. Sorry.
Yeah, it's similar to debtors, and debtors is an asset, so it's the same. It's
Yes.
also a trade receivable. Okay, got that?
Yes.
Perfect. All right, what balance does an asset have?
Debit.
Good. That's why you have debit accrued income. And is the income too high or too low? It's too low. Why? You haven't received it. Does that make
Yes.
sense?
Yes.
Understated means it's too low. If I draw a diagram, month 1 to 12, okay, now we've done the work for the full 12 months. But this 1 month is outstanding. Okay, have we earned the income?
Yes.
Yes. Have we received the income?
No.
No. So see, it's still receivable. It's a resource that you control. Okay, you would be able to receive this income in the future, not now, but later on. So you provide for it in the current year. You cannot show 12 months. You cannot show 11 months in a 12-month year. Make sense?
Yes. Yes.
Good. Okay, and then you have a few others. These ones aren't as difficult as those 4. Those 4 that I covered with you, actually 5, okay, because remember the one is the stationary one, but the stationary one is easy. It's the other 4. It's the accrued expenses, the prepaid expenses, the income received in advance, and the income accrued income. Okay, those are the 4 that you need to look out for. Those are tricky.
Okay.
Right, I will revise them when we go through textbook examples because they will come up. Okay, credit losses. There's the definition. Writing off debtors that won't pay. Do you know what this is?
I would say it's a liability.
It's not a liability. There's no obligation. So if you write off your debtor, you're going to pay them in the future.
No.
So what is this viewed as?
Expense.
Very good. Why is it an expense? Here's the reason why. Okay, remember, what is the definition of an expense? It's an outflow of benefit. Does that make sense?
Yes.
Okay, so have I lost something?
Yes.
Yes, I lost the debtor. I wrote off the debtor. Okay, I've lost the debtor. I no longer have a debtor. I have lost the debtor, so I have an outflow of benefits. Okay.
Yes.
What balance does an expense have?
Debit.
Very good. See, that's why we have debit credit losses. See that?
Yes.
Okay, you're debiting your credit losses because this is an expense and you're recording the expense. Okay, why do you credit the debtors? Do you know why? I think you do.
They don't owe you as much now. So then they're decreasing.
Very good. Yes. Notice the words writing off. So, are you going to increase the debtor? Will you have more debtors when you write them off?
No,
No, you'll have less debtors.
Yes.
Okay. So, if we're following the steps that I gave you earlier, what is the account? It's debtors. What is debtors? An asset.
Asset.
What is happening to the asset? It's decreasing. Where do assets decrease? On the credit side. There's all the steps. There's the analysis that I was talking about earlier.
Okay.
Okay. Happy with that one?
Yes.
Awesome. Okay, I think we've got one more, two more. Let's just check. Depreciation. Tell me what this is.
An expense.
Good. Why? Explain why.
It's an outflow of benefits.
Yes, good. It's a loss of value because of? Which assets are depreciated? Not all assets are depreciated. Which ones are depreciated?
Non-current.
Non-current assets? Not all non-current assets are depreciated.
Okay.
Do we depreciate land? No.
Oh, are you talking about PPE, property, plant, and equipment?
Yes, that's what we're talking about, yeah. So depreciation is applicable to assets that are used.
Yes.
Okay, only assets that are used are depreciated. I use furniture, I use equipment, I use machinery, I use vehicles. Okay, those assets are depreciated because of the use of those assets. Make sense?
Okay. Yes.
Okay, do you remember what this is? It's an expense. Do you remember where expenses are recorded?
Debit.
Debit side, yes. Okay, what is this? Cheryl, do you know what this is?
I know what it means. So it's basically the depreciation over the years.
Very good. That's 100% correct. Accumulated depreciation is basically the cumulative. You're adding up every year's depreciation to get the total. Right, but how do you view it? Do you view it as an asset, a liability, an income, expense, capital, drawings? What do you think?
I think it would be a liability, but then it's not an obligation. So
yeah, it doesn't fully meet the definition of a liability. It's similar. The better answer would be negative assets. Okay, why do you show it as a negative asset? It's because of this. The carrying value is the cost minus the accumulated depreciation. Remember that formula?
Yes.
Okay, so this takes away value from the asset. It removes value from the asset. It's a negative asset. I've even got it there.
Okay.
Okay. It's seen as a negative asset, inverted commas. It's like a liability, but you don't call it a liability because, as you said, there's no obligation. So it's better to refer to it as a negative asset. Negative asset meaning it's taking value away from our asset, from the land, from the vehicles or from the equipment. Got that?
Yes. Yes.
Perfect. Okay, and I think that's it. Yeah, that's it. Right, here's just a summary. We went through all of them. I've put this up because I'm stressing how important this is, NB.
Okay.
Okay, when you look at disclosure questions, in other words, the textbook questions as well as the exams, okay, disclosure means we're going to be showing the assets, liabilities, expenses. Right, all of these things need to be disclosed in your financial statements. So where would you show your prepaid expenses if it's an asset? Which statements?
Sorry?
Which statement? Which one?
Prepaid expenses.
Yeah, where would you show the prepaid expenses if I'm looking at disclosure? Which statement? Statement of comprehensive income, statement of financial position, statement of changes in equity, or cash flow statements?
I really don't know because we look
financial
at it as
position. Remember, financial position was looking at what? Assets and liabilities. Remember that?
Okay, so I have a question. So are we creating it to be an asset or is it an asset?
It is an asset because you're adjusting for the expenses, prepayments.
Okay.
Okay, so prepaid expense is an asset. Accrued expense is a liability. Okay, you're creating it because you're making the adjustment. Does that make sense?
Okay. All right.
All right, so where are we going to show it? We're going to show it in the statement of financial position.
Financial position.
Because it is an asset.
Yes.
Right, and this you'll see when I show you worked examples later on. Okay. Accrued expense, what is it? It's a liability. Where would you show it?
Financial position.
Very good.
Yes.
Okay, in the statement of financial position, you will show assets and liabilities. Where would you show this asset? Consumable inventory adjustments, stationery on hand? Same one, hey?
Statement of financial position.
Financial position. Income received in advance?
Financial position.
Good. The accrued income?
Financial position.
Good. Where would you show the credit losses and the bad debts?
Comprehensive income.
Very good. Income statement, statement of comprehensive income. Yes. The depreciation?
Also comprehensive income.
Very good. Yes. Okay. See, that's important in terms of disclosure. Right. So you're not going to do those basic examples that you had done previously in 1502, but you need all of it to do 1601 because you're going to be answering disclosure questions. So knowing this helps you to do that, the disclosure, because then I know where to show those line items. Okay. Happy?
Okay. Yes.
Awesome. All right, so I'm going to stop there for this week. I'm going to continue on page 38. Okay, so the first set is quite long because it's lots and lots and lots of revision from 1502. All right, so I still haven't finished the rest, but we'll finish it next time. So next week, I'll go through the rest here. What I would suggest you do for next week, have a look at these slides and see how much of it you still remember from 1502. If you don't know or if you can't remember too much of this, it is a good idea to maybe do a little bit of revision, okay, but not everything. So don't go study everything you did last year or last term, last semester. Just look at the important bits. So allowances you need to look at, okay? That's worth revising if you haven't gone through it since last term. Depreciation, same thing. If you haven't gone through it, it's a good idea to revise some of it. I'm going to show you depreciation. I'm going to show you allowances, adjustments. I'm going to show you all of this in worked questions, okay, from the textbook and from past papers later on, okay? But it's always nice to go back to 1502 because I'm not going to go back to 1502. I'm going to cover 1601, but when we have instances where we do have questions covering depreciation, or when we do have an allowance for doubtful debt, or when we do have an asset disposal, right, then I'm going to revise 1502. Okay, but I'll do it when we get to it. Okay, when we have a particular question and we're dealing with it, then I'll look at it again. Right, these notes are notes that I've taken from 1502 just to summarize key points that you need going forward for this module. Okay, you can't do 1601 if you don't know what this is, an allowance for credit losses, if you don't know what this is, depreciation, if you don't know how to process a disposal, and if you don't know what some of these PPE considerations are. Okay, this is just something additional. This we'll actually see more later on, okay, when we look at some examples. Okay, you'll see intangible assets that are spoken about, but not in detail. Okay, they just discuss a few things when we look at 1601. Okay, and then there's a few notes here on financial instrument. Okay, this I'm going to cover with you. That you don't have to worry, that we can look at. This is for investments, which come up sometimes. Okay, I'll also cover that. Yeah, that you wouldn't have covered. You actually, I think you might have. There might have been a section because this is 1502, but it wasn't in detail. It was just a note about it in the textbook. But you said you didn't have the textbook, so you might not even have covered this last semester.
Yeah.
But I will go through it with you.
Definitely did not cover.
Okay, that's fine. Don't stress. We'll cover this. We'll cover this. This you would have. Perpetual periodic, that you can revise. That you definitely would have covered. And periodic you would have covered. The cost of sales formula you would have covered. I'll discuss that. Okay, so those are the things. So inventory, I would maybe encourage you to do some revision. Revise some inventory if you're a bit rusty. Revise the property, plant, and equipment if you're a bit rusty. And go over your debtors. your allowances if you're a bit rusty. But I will go through all of it with you. We'll go through those last few slides, and then we've covered all the important bits and pieces. Okay, this page here covers everything from 1502 that you need in 1601. Okay, property, plant and equipment, machinery, these are the more common things that you'll see in 1601 that they'll mention in different areas. Okay. All right, Cheryl. Sorry I went a bit over, but yeah, I do have some time on a Tuesday, so I'm not too stressed. As long as I'm done by 4:30, I have enough time for later on. Okay.
Okay, no problem.
All right, so I'm going to stop the recording here, and then I will obviously upload this as a recording, and then I'll assign your Gmail account access. Every week I'm going to record, and then every week, if you need to go back to it later on in the semester, you can always go back and you can review the content. Okay.
Okay.
All right. Take care, stay safe. See you next week.
Okay. And for next week, do I need to revise? So just what we went through now is what I need to revise for next week.
Next week, I would say just sort out all the stuff with UNISA. So you've got everything. You've got your. Make sure you do the assignment. Don't forget to submit that today.
No, today hey? I'm going to submit it right after this now.
Okay, perfect. Yeah. So don't forget to do that. That's important. Revision wise, just look at those three things that I mentioned. So plant equipment. If you want to go back and look at 1502's content, but you've done the assignment. So hopefully, doing the assignment helped you to revise some of the PPE, the depreciation in that. You can go and you can look at the allowances. Remember, creating an allowance for bad debt, that's something that you can look at from last semester. And the inventory, that's it. Those three things.
Okay.
If you don't have time and you've got other subjects and you've got other things to complete and other assignments to submit, then don't stress if you don't get time to revise. I'm just recommending it. Okay, so I'm recommending some revision. I'm going to cover the rest of this set of notes next week, which will cover those three things that I'm mentioning.
Okay.
But it's nice if you've recapped some of it, because then when we look at some practical questions from the actual study guide, at least it'll make more sense. Okay, but don't worry. Remember, week on week, if you just stay with me, if you just go through what I covered this week, go over some of the key points, and then next week I'm going to cover more with you, more content and actual 1601 theory and content, and then you can have a look at that. So if you just keep up with me week on week, go over what we've covered, you'll be fine. Okay, when we get to tests and exams and we do assignments, we'll do it together. Even assignment 2, I want to try to do live with you in one of our weeks. But obviously, before I get to that, I need to cover more contents.
Yes.
Okay. Is that all right? Are you okay? Any other questions?
Yes. No, that's it.
Okay, perfect. All right, Cheryl, take care. If you need anything, please, I'm available on WhatsApp. You can always WhatsApp me if you have anything urgent. If they post more last-minute errata, let me know. I'll look at it. But I think the errata's fine as it is. You can submit the answers that you've got. Did you get the email? I sent it earlier. Just check that you've got it so you have the updated spreadsheets.
And would you email this video to me as well? Or how does it work?
I did send the video. I don't email. The video is uploaded and I give you access to it. That's separate. Yeah, that's different. But
Okay, yes.
The email I sent you.
Yes, I get it.